let's just... Oh boy, what a weird day today. Okay. I gotta get out of Discord here. Good morning. Hey, how's it going? Yeah, I mean, GME is gonna be on everybody's eyes today. Everybody's got eyes on GME. I'm kind of curious about Tesla. A really nasty sell down, and it broke through that rising trend. To me, it looks like weakness. I've Mr. Momo, you and I have been, I think you and I on Discord have been talking about it, and some other folks chime in every now and then. But man, I don't know, I got a little bit of a bone to pick, I guess, with it because there's a disconnect between some of the elements here. But whatever, at the end of the day, there's so many ways you can kind of like justify moves in certain ways, whether you're using like news or you're using whatever. But the fact is, for me anyways, is that the chart looks like it's breaking down, not up. So to me, this looks a little bit more like an LSPY right now. I'll be willing to say that it could definitely come back up and fill this gap at 287. I'm less convinced at this point, and I know that it's possible. What we're getting is just kind of like an iterative motion here as well. But that's what I'm trying to say. Like, I just feel like it's a mixed bag. Like the last few trading days have been pretty easy to see for Tesla. We're gonna talk about GME. Don't worry. If you guys are like, hey, what about GME? It's up 15% today. Yeah, I know. I'm not surprised, and I'm not particularly like overly excited about this either. I think there's a lot of potential here for a lot of things, but I don't really want to get ahead of myself on it. My assessment was that it would get up to sometime at or around earnings, get up to 28 to 29 level. I had it marked off, and that's what happened. So I'm kind of happy with that. I see it's just a win. I don't really worry too much about the rest right now. And we're definitely gonna get there today. If it makes you guys feel better, and it might make some people feel better, because some people on the this stream, they could kind of click on and click off really fast because of what I'm talking about or not talking about. Well, I don't even know where it went, man. It's gone. Yeah. I don't think there's anything wrong with... it's probably going to pop up in a minute. My computer is messed up, so I'm going to just tell you that right now. And so I've been having some problems yesterday and today. Performance issues, it's not what you think it is. It's actually power. Because my battery has been on the fritz for a while. It's a 10-year-old laptop computer, and it's pretty strong. I mean, I can run pretty much all my Adobe programs and everything still to this day. I got a really good deal on some really powerful, it's like a dual graphics kind of thing with extra RAM and junk that I put in. And I mean, there's all kinds of fun little things you can do, even with a MacBook Pro or whatever laptop. But one thing that most laptops can't escape is battery life, and my battery's been swollen. Which I know it's on the fritz. When it starts swelling up, you're like, no, it's gonna die. I've had that happen before with some other devices too, but I need to either get a new battery for it and replace it and hope that it still works. I think if I do that, it might be a good temporary solution, or I just need a new laptop. My plan this year was to just save up and buy something new. Unfortunately, for some reason yesterday, it just refused to charge. And when I got on this morning, I was like, this is bad. It's not charging. And a lot of it has to do with the power usage, like what's being used, which programs, how is it running. And so anyways, I'm skeptical. I'll just say that my computer's going to last much longer. And it's not good. I don't want it to just die on me, but it's been a minute anyways. So I probably do need to get a new computer. It's 10 years old. That's old. Over 10 years old. So I'm surprised it's still running like modern Adobe software even, as well as it does. It was a beefy computer when I bought it. But anyways, I'll keep GME on the screen. The thing to note about GME right here, and I've said it like a number of times, and I don't want to kind of go through every single time we talk about GME the same things. I spent an incredible amount of time on GME leading up to earnings just to kind of see where it was going to go. There's nothing particularly wrong with what we're seeing here. In fact, and you might even say it looks pretty good because it's already kind of busted out up here. But I do need to mention that this is still the region of contention. Just because there's like a huge amount of volume on the Bitcoin news, so on and so forth. And it looks like they beat on EPS, which is great. I mean, pretty huge beat there. They missed kind of bad on, if it were by itself, like if this had just kind of met standards and then this had missed on revenue that much, I think people would be a little bit more disappointed. 13% is not gigantic, but still, it was a miss on revenue. So revenue came in a little low, but EPS was like way up. And then they announced that they were going to, build assets in Bitcoin, so on and so forth. And oddly, I had bought Bitcoin this past week because I was like, oh, all this Trump news about creating like stable coin and all this other junk and really investing in crypto. I'm like, I think it's a good time long term. I mean, you normally want to see kind of a final sell down on a sell the news kind of thing. We might see that on Bitcoin. So I'm not like jumping all in all at once, but I do think Bitcoin could go to chart wise, it could go to like 5 million or something. It's ridiculous. It seems like a lot, but then if you look at the numbers on Bitcoin, it's like, well, they trade in like the tens of thousands. It's like just the way that the chart is. So, but I definitely think it could go really high. Anyways, I think that at this particular point in time, that news is really good and people are going to be riding that high today. They're going to be looking for GameStop to kind of make some kind of massive squeeze move. But for me, I'm like, okay, well, it hit the target zone that I wanted it to hit. I knew that it would probably have to do that before the April 2nd day. So at latest, I had put it up over here. Like, well, it could go up over here. This is no different than the chart was. I didn't change anything. So, obviously it's beyond even where I thought it might be right at this time. But that blue zone that I have on the chart is really where I saw it going. And big picture wise, what's important here in my mind is the possibility of a distribution. And I need to kind of make this really clear because I think people are going to misunderstand. I already had somebody come and tell me on, I had somebody on the Discord come and say, well, I don't understand why you think GME could go ahead and start squeezing right now, but AMC might go down. And I'm like, well, it's a narrative, right? It's to tell the story. You just look back in time at the history of the two companies and the two prices. And AMC has come down to new lows, period, by far. It's come way below new lows even. Proportionally, doesn't matter how you do it. Value-wise, it's come down. And it's significant. It's dipped low liquidity. GME never did that. GME raised $4 billion in cash. AMC has failed to do something like that. GME doesn't have this kind of massive debt problem that AMC has. When you look at them as both as short squeezes, have they both had massive moves at similar times? Yes. But what was going on before those moves is very significant. And I think that to marry them together just because I cover both doesn't make any sense. And it also doesn't really do them any justice. And there's people who will say, well, AMC won't run without GME. And that's not true. We know that's not true because we've seen before that in interim, not in these big moments, but in the interim between these big moments, they've had wildly different ups and down swings. They often move in sort of a tandem, almost like a slinky, maybe. Like one might move while the other is consolidating, and then vice versa. And they do seem to be kind of married somewhere, maybe joined at the hip to some degree. I will never say that that's not true. That's not my opinion. My opinion is, yeah, they're pretty closely related. But I had somebody say like, well, how could GME possibly be going up into a squeeze and be going up to 200s, but AMC is going to go down to like 2 or below? And I'm like, this is not that complicated. Actually, it's very simple. If you look back at the 2020 area, and I'll just pull it up, and we could do it right now just to look at it. Let's go to like a 4-hour chart here really quick. It's really simple. It's very simple. It sounds like this complicated like mental gymnastics, but it's not. It's super straightforward. We have 2 examples of a squeeze here from 2 different companies with very different outcomes in the end, and yet at the same time they basically moved in tandem at one point. And there's one specific place where we see that they've really moved together, and that was the original big kind of squeeze moment, right? And I don't think people put these charts up against each other enough, and it's such a simple thing to do. Like, this is essentially what GME is doing, or I have it on the chart, in 2021 versus AMC. These are complete opposites in some regards leading up to that squeeze moment. So at that time, if you had tried to draw the comparison at the time and said they're going to move together, you would be confused as all get out. You'd be like, what the heck's going on? AMC's going the opposite way. People love that term like negative beta or whatever people want to call it. You know, when they talk about, AMC versus the market or whatever. I'm telling you right now, this is not that complex. Both start the squeeze at the same point, but the moment that they start is very different. This is September 4th, 2020 right here. And GME has a cross up and it breaks above and it does an SOS in its lower range. Okay? I'm not fudging anything here. This is literally the exact same point on the chart right here. Here's September Friday, September 20th on AMC. This is the simplest thing you could possibly do right now. Now, does this mean that they have to do the same thing this time? Of course not. Of course not. Of course they don't. But this is not complicated. This is really straightforward. When you go into the squeeze moment, and even beyond that, when you look at what happened in June, they are not the same. Like, there's only really like a couple instances where they're really moving in perfect tandem. And it's those major big moments. So we look at when that really starts, and this is like January 19th. And you look at January over here, I kind of marked it off a little wrong. It should be the 19th. It's like right there. I mean, even before that, AMC wasn't even moving at all. I mean, it hadn't even broken out of its creek yet until the 19th. And look where GME is at the same time. And that's not even remotely similar. I mean, in some ways, it's similar because they're both moving up. But this hadn't even left the creek yet. Like, it wasn't even broken out yet. This is where it was, right there. It's underneath its moving average here. And GME's already, like, doubled, quadrupled in value at this point. I mean, from its bottom, it had gone up over 1,000% at that point. So if you ask me, like, how could it be that GME might go up in a squeeze motion over time and build out into a bigger squeeze, whereas you're kind of expecting that AMC doesn't do that? Well, first of all, their charts are different, okay? There are similarities. So I want to say this. GME has a possibility to go for a spring motion, either at 17 or down to 6. And I'm not going to shy away from that. I don't care if people don't like it. That's not my fault. The chart is what it is. If it goes into a distribution, it's going to try that 1750. And if that's not enough and it distributes again, even if it pops in June, it could go down again. So what we're really talking about is not could it. We're really talking about is do you think it will based on everything that you've seen. I don't think GME necessarily will. And I had someone on here once say to me that GME won't do that. It won't go down that far. And I'm like, look, it's not my responsibility to say what it can and can't do. What we want to do is we want to say, this could definitely happen, and it's in the chart, and it's where bears are aiming. But then we want to see what happens. That's too reactive, Booksy. I want you to give me the crystal ball answer. I can't do that. I can't. I have to see this cross up happen. At the end of the day, like when we look at this as a series of waves, you just see the M crosses here. They're just consistently jumping up and jumping creeks. It's that simple. 1, 2, 3, 4, 5, and then go. I mean, there's like 5 different creeks that are approached and tested, backed up, approached, tested, backed up, just consistently making higher lows, higher highs. It's very straightforward. And ultimately, the direction is just up during that squeeze motion. But during that same time period, AMC's motion is just down. It's just down. Why? Because it's going for a liquidity grab. It's going for the spring. And this doesn't seem to, I don't know if people understand the idea of a spring is not some fun little like exercise and, it's going to be this wonderful explosive thing that happens and it's so perfect and you can call it out every time perfectly and it's amazing, right? Why are you talking like that, Booksy? I don't know. It's not quite that simple. It's a liquidity test. And I think that people need to remember that it's about liquidity. When this stock needed to go up, when there was a desire to kind of take it up, instead they went down first. Why? Because there's a desire for liquidity. Whether that's getting more shorts on board or ultimately what probably makes the most sense here is the on-balance volume shakeout. There's a liquidity crisis here that doesn't seem to be present on GME. And every time that opportunity presents itself, almost without fail, every time there's an opportunity to have a liquidity check for AMC and test low, it does. Like 99% of the time. We've seen a few exceptions here and there, but almost all of the time, it's always the case that it's just going, So I even have this kind of drawn out a little wrong here because technically this was already like shooting up at this particular time. I have it like not shooting up. It was already up. So when you look at AMC and you look at the volume, the lower it goes, the lower the volume. Maybe. But there's still, you wouldn't be going down unless you were still finding sellers. So the problem may not be that the sellers are super strong. The problem may be that the buyers haven't stepped back in. But I will say that a lot of people disregard this period. I don't know why people do this, but they disregard this period right here. There's a huge hike in on-balance volume in this final shakeout that happens on AMC before the spring. This is the peak right here of on-balance volume in this entire range is right here. Before it leaves the range, the on-balance volume actually peaks. It gets to its maximum amount here. Not at the top here, not at this first reaction, not at the bottoms. People aren't buying heavily at these bottoms per se. It's right here on this big push. That's like the indication that we're ready to go, and yet we still sell down lower. Why? There's still a desire to shake out weak hands. And just basically get some more shorts on board and to start the squeeze. It's a liquidity question. Some stocks will not do that. They don't need it. They do not find that demand. GME clearly did not need it here. So if I look back at these two and I'm like, hey man, why do you think one could go up while the other may not? I don't know. The only other main example we have of this major squeeze motion, they don't move together. And I'm kind of sick and tired of people saying all the time, like they don't have eyeballs. I'm not trying to be rude, but that's the way it feels like, okay, my eyes work. I don't know where you guys are looking to see that they always run in tandem. They really don't. And then when you get to these one motion, this is like 20 days out of 3+ years that they really run together. Like that's it. There's moments, and you can count the 2 days that we did back in last May. But even this is so different for GME. Like, this is the May run up right here. It doesn't make new highs. It's just retracing like an old area. It's crazy different than AMC going to a new all-time high at that point. And look at the build out here on AMC. Look how long it took. GME goes to new all-time highs within the matter of like a 20-day period or whatever, and then it's just consolidating the rest of that time into November. Look at AMC needing that reaccumulation. It's doing a reaccumulation period of like 3 months. Why? Why did they stop it and just reaccumulate? Don't say it's because the buy button thing. They could have ran the same distance. And I'll tell you why. Because the chart is built that way in terms of the structure and the time it takes and the cause that's needed in order for the effect to happen. It needed more of a cause. It built a big cause down here, but it wasn't ready. So it goes for a liquidity spring. The thing's going to run. We're going to drop the price really low, and then we're going to squeeze. And then you need a reaccumulation before you can get to the all-time high. And it does. That, to me, the difference in these charts is not a question just of technicals. There are technicals there, of course. But one of the biggest parts of technicals is volume, which is dealing with liquidity. Like, where are you finding buyers and sellers and how many? It's not a complicated question for me. And I did this before, and I looked at this, and I was like, the average liquidity that AMC uses is always the same. I think I did it like a year ago or something, or 2 years ago now. All of these runs, if you take the volume over time, it's always the same. It's like 6.8 million per 1% or something like that. It never changes. It's oddly always the same, right? So like, it takes a certain amount of volume to drive the price. And they're trying to I think, trying to find this, operators always trying to find that sweet spot. That may have changed quite dramatically back here. This was a massive, massive move in terms of volume. So it would not surprise me if that number is different than it is now, than it was then, but I'm sorry. I'm saying like, so the idea that one could potentially kind of work its way back out from here doesn't really surprise me. If GME starts building out and it doesn't go for liquidity, and the two places that I've marked off that are very evident on the chart, in my opinion, like I'm not going to negotiate what I've already kind of charted. I don't care that the chart's messy. I get it. It's messy. But if you watch me build this chart, you'll know that I put 100% of my own due diligence into it. So I'm not going to question it on my end. You can question it on your end. That's fine. But on my end, there's no question. Like, it's 1740 something, which is about 1750. It's that particular level it took off at. Oh, I won't do that. Well, technically we did do that. If you look at the bigger iteration here, we came back down and tested that original backup. Remember that backup that GME had when it pumped and it dropped back down? And this is the area it broke out of. We were just talking about it. That was like right there on the 15th of January through the 19th. Oh, it will never come back down there. Well, it did right here. I mean, that's exactly where it came back to. It fully retraced all the way back down to that same level, which was at this particular angle is like $10. That is no different in this particular situation than us coming back to 1750. It's just not. If you're just doing it from an iterative perspective, this should go down to 1750, and then it would pop up to 35, and then it would rinse and repeat. I'm not doing it just from an iterative perspective, but I'm just saying, like, if you're thinking like, it can't possibly come back down, it's got to go up. I'm sorry, not sorry. This is very, very possible. It's already done it once on the biggest picture possible, and now it could do it again. So I'm not arguing with anybody in particular right now. I'm just kind of ranting about the difference between the two. I don't see them the same, and I've already kind of mentioned it. When you look at the directional movement here, this had some indication you could be up near $40, right? It's very possible because of the way this moved back in, really it goes from like November all the way through January. The angles that are set up here are much warmer, like they're much more upside. The angles that were set up on AMC are not like that. They're downward. And we've already mentioned it frequently, but there's really only a couple different angles that make any sense here on AMC, and they're both down. One is like 367 and the other is 404 or 420 or something like that, up in this area near the creek. oh, it won't go over that level without breaking out. It's not going to go over the 200 without breaking out. Well, like heck it is, man. And this is another one that comes up every single time we talk about them. I don't know where this is coming from. Like there's no EMA that's like magic bullet for AMC, especially on like the 4-hour and daily. It has frequently used these to distribute. This is the same EMA. It's like the 200 or something. It's the same thing. This is no different. This went up above it. It went back into the previous range, almost 50%, and then still dropped to a new low. They're not magic bullets. Now, did we jump it and ride above it during the uptrend? Yes. But then every other time since then, it's been used as a distribution. So again, it's not like, oh, I don't think it's going to come back down. I get that. Yeah, but we've already done that. We technically just did it in May. We didn't hold, you know. What we need is a slingshot. And I've talked about that before. We need the liquidity dive. Maybe it doesn't happen here, but I'm like, I don't know, guys. It's already pushed to a new low. Maybe it's a spring. You guys are like, well, it could just be a spring right here off of this. And you're wrong. And it's actually an LPS on the big picture. And yeah, maybe. But there's no way for me to confirm that from where we sit. The only thing I can tell you is that this is sitting lower. It doesn't look like it has to break out. It looks like what would be the most obvious here would be to come up and not break above, at this point, probably not break above 370, to be honest. And if we're lucky, we might get an extension up pretty high. We could technically come all the way back up to like the 4s and still be fine. We've done it before, but it would be in a distributive motion in that case, where it's like a head fake kind of deal. So how do we break out right now? It's fairly straightforward. Because in order to really see this breakout, at the end of the day, you need a big creek jump, and our creeks are pretty darn wide. And I've said this before, it's frustrating for me because I'm like, really want these to not be so wide. This is probably one of the better ones right here. It's like the original creek. You can see that this becomes like a gigantic distribution if you look at it that way. And really the only time we're above it for substantial amounts of time is just into earning or after earnings, and then the dilution immediately get knocked back beneath. It looks like a head and shoulder. This happens sometimes on AMC. It happened in the August 2022 move. They look like it was going to go, and it knocks back up. It's pretty classic garbage, but didn't even go very high at all, did it? Here, it's actually pretty similar to what we see in that 2022 bottom. Unfortunately, because again, it didn't breach the creek on the side. But this is probably like one of the big ones. And so again, you'd be like, well, if it gets above there, it's just going to run. No. I'm using, between the two, I'm using kind of the most extreme outer marks as my confirmation zone. And for me, it's like this guy, this big green one coming down, which is it's a weird creek, but it is what it is. It's the one with the value shift on it. And I think it represents where the real resistance is. It loosely kind of cuts the distance between these two. If you have like the top and bottom, it's kind of like splitting the difference. I wish there was a better way to explain it, because if you don't have it on your chart, you're probably like, what the heck is that? It looks like it goes through nowhere land. But it actually is representative of like the two tops here, but shifted down, the proportion that I think they're shifted down based on the shift value. And I think that's where the actual resistance is. Could I just draw a line, Booksy, from these two tops down? You can, but I'm telling you right now, like, I think that could be used against retail. I think that could be a bit of a fake out kind of tactic that, oh, it's breaking out. We see this a lot with there's a lot of arguments that used to happen about the linear versus logarithmic charts. And I've argued that really institutions mostly would work long-term, so you should be using logarithmic. But people still insisted on using linear charts. And linear charts have had breakout after breakout after breakout after breakout, and they don't work out because the creeks on the logarithmic chart are like way out there. They're like really far off. And people are like, no, we're at the creek. And I'm like, well, what do you mean? Well, if you use a linear chart, this whole thing looks like flat and sideways and all that stuff. And a lot of times, yeah, like it definitely looks like the slopes on those could be really significantly different. So in either case, it doesn't really matter what you think. because in either case, that intersection, as you can see, I've drawn 1, 2, 3, 4. The intersection here is pretty straightforward. It's like it's up here around 370s. And in order for us to really confirm a breakout that goes, I think we'd be in the 4s with support and then ultimately jump there. That's it. It was like that simple. And then I think it's very possible we're just running. Really? It's not a head fake? No, I'm serious. I don't think we're going to breach this outer wall and fake out. I think if we breach anything, it would be right here, like 358 up to 4, and that could be a fake out. But I think if we get above that marker, up like above 420s, I don't think that's a fake out. That's the only one I could think of that I'm like trying to go back and say, like, look, I'm going to defend this position that I have that I think I'm right about, that this isn't really poised for that breakout. Because again, all of these are indicating downward motion. What makes a lot more sense to me, anywho, is that they're spread out amongst a later date, like, for example, the May date. And we've already done this one extensively as well. We actually pulled out some really solid, I think, really solid estimations of where this might go. And I do think it starts in May, and I think it probably squeezes up. And it's a longer potential squeeze than expected. It's like a month, in my opinion. I think it's going to be a little slower than last time. And it probably goes up to near 15s, and then we'll see. But could GME potentially be going up to like 200 something in May? Yeah, of course. I don't think it's that different. I think the difference is like where they're set up currently. And honestly, if it goes straight up, it's going to be, again, fairly straightforward. I think it breaks out 50s in May instead of breaking out from lows in May, like 17 or worse. So this isn't really that complex. When I say I think one runs and the other might not, I'm not really saying it's taking off to the moon tomorrow. I'm saying it's really building out over time, potentially up to June. That's totally possible. Totally possible. We already know that a lot of the shorts, based on what that one guy said, they're looking to get back in at 45 to 50. So they clearly see that as like the big wall that needs to be breached, and they don't think it's going to be breached. Well, it just so happens that the main parallels down here, the big setup on these waves, that is the wall that needs to be breached. So if it's up there at that time in mid-May, we're talking about the 14th through like the 28th or something, so mid to late May, if it's up there at that time, there's a chance it's going to just take off and head towards the 200s. At least 190, possibly even as high as 350. And I'm not joking about that. I'm very serious. I think it'd be interesting to see if it actually goes that far, you know, because I'd be curious to know if it stops short at like 190 and then kind of consolidates for several months. Based on what we saw in AMC, it looks like there's going to be a slower second move. And this is a perfectly measured second move. Oops, that was an accident. This is a perfectly measured second move. We went through it. We walked through the rotation on AMC, and it was like spot on when you do the rotational symmetry on it. And it looks like we're lagging a little bit, so give me a second. And we did it. We walked through it just to kind of see what we could see and see if it matched. And it matched really well. What rotational symmetry. So basically on the way down, we had this like massive drop. That should be shorts that are entering into a play. Well, did they cover down here? Maybe some, but it actually goes from pretty high up. It goes from all the way up here around like 55 all the way down to like 7. Well, I thought you said that was just part of the shift and the split. It is. But remember that like at that time, we know that Vanguard dropped like 60 million shares or something, but there's probably also an accumulation of shorts that also happened that we don't really know about. There's more volume than just 60 million or whatever in this time. When we look back at this, it's like there's so many things that could have happened, but the way that I understand the wave patterns and the way that these typically work is that this particular move would be like the final move here. It's almost always like exited at the end. And then the inversion is actually these guys. Now here's the curious part. Okay? You might say like that seems a little bit arbitrary. Where'd you get that from? Well, it's again years of just kind of looking at these things, but also I don't think I've done this just one way. I've done it like dozens of different ways, almost always the same result, which is that is the reactive move. What's interesting about it in this particular example is that the wave here actually matches perfectly. And when you measure it out in a backwards motion, which we did on stream, surprisingly, maybe, it actually is perfect. It's a perfect measurement up into February 2026 to the next gap fill, which is 44. Oh, but you said it was going to go to like 60 or 90. Yeah, I might backpedal that a little bit because the more I stare at it, the more I'm like, that shift value could have really screwed us over. I think that shift, if you drop the actual angle, does change the value. And when you do this in reverse, it's perfect, right? From the low target ends up. If it doesn't hit the low target ends, could it be higher? Sure. Just move all this stuff up. It's higher. But if it goes down to the low targets we think it's going to go to, this is 100% perfect build out on the wave. And the wave is 1-to-1. It's a 2-year cycle. It's brilliant in some ways. It's frustrating in others, but it's amazing to see how similar it is to 2021. GME is just a little different. And so when we look at this big move today, I think you should just take it for what it is. I'm not going to like sit here and rain on the parade and be a buzzkill all the time, but I really think you got to just take it for what it is. They had a positive report at earnings. They're in a good position right now as a company overall. Anything can happen. We don't know if there's going to be another dilution or something like that. I'm doubtful, but, who knows? My big thing right now is like the technicals don't really demand that this is running at this moment. It's close, and there could be a run in the future, but we've got this April thing coming up. We don't know how this is going to affect the market. I don't care who you are, and there's people who were like criticizing me the other day for like not being 100% about what happens. And I'm like, well, who the heck are you, Like, and who do you think I am, right? That I could somehow tell the future doesn't make any sense. Nobody knows. Nobody knows exactly what's going to happen on April 2nd. Is it going to be a kind of a catalyst event? Is it going to be a bad kind of anti-catalyst event? Trump's calling it Liberation Day. We don't know what what else it entails. We have no idea. And frankly, the statements that come out from our administration have been very rapid fire, very quick, back-to-back statements that are often contradictory. It's confusing. It's confused the market. And I don't think anybody in their right mind really knows, which is probably why a huge chunk of big money has left the market. They've left the equities. That doesn't mean they're gone forever, but a lot of them are sitting on like a huge amount of cash. One way or the other, it might be used, but I have on April 2nd, it's possible, but I have doubts that any side is going to win. I don't feel confident about it. So when I look at this, I'm like, all right, there's a gap up here at 32. Now, 32.50 was, if you recall back here, when we first did this wave and it failed to make a new high. It never broke high here. Remember, it pushed up to like 28, and then I was like, well, it didn't make a new high. And then it immediately goes down and makes a new low, and you're like, that's not good. And it starts iterating down, and you're like, well, it could break on an iteration, doesn't break, goes down again. But if you remember, when this happened, we were looking at this saying it probably heads up to like 32. There's a lot of reasons for that, and I don't think that it's a coincidence, not just because of the gaps. You guys are like, well, there's gap fills. That's the easiest reason. Yeah, that's a liquidity thing, right? It was left on the table. But also, as an institutional marker, they had driven it through a cross here, which is a pretty straightforward measurement of like a 50-50 down here with the middle cross going through. And that's this blue line going up. This is the bull wave. So when we look at this as a bullish wave, up, down, up again, down for liquidity and up again, that sort of straightforward approach would definitely lead you back. And we did it in a tight way here on a rotation, and then we lengthened it out to the full rotation 32 up to near 37. So is it possible that this goes up that high right now? Like it could go all the way up to here and then chill out, do some kind of breakdown in April and then build out again and go up? Sure. These are just targets. I draw these little lines to think about how it might move. I don't draw them because I think this is exactly how it's going to happen. It's cool if it happens that way. Sometimes it does. All right. Sometimes it does. Like an example would be on the Tesla move that we charted. It happened pretty much exactly where I thought it was going to happen. Like happened to be building out. It pumped up to this zone at like 280 first. There's a second zone that I think we haven't gotten yet, and that's over somewhere in the futures on the 1 minute chart right now. I had like 2 markers, and one of them got hit. The other one just hit in extended hours, so I'm not sure if it's going to go up there again. And I'm a little disappointed because I was in, obviously, some calls. I had played the first batch, and then got into new ones, and it's not looking too hot right this second. The second zone was up here around 298. But did it hit my first target? Yeah. And I told you guys I traded it, and it does it well. Sometimes you're going to get dead on with these kind of lines that you doodle, but majority of the time that's not the case. I'm okay saying that because I'm not really looking to I'm not really looking to have a crystal ball anyways. What I'm imagining is things that are, and it is imagination based on fact, where these levels are. It's like, what would it look like to break down here? What does a distribution typically do? What does it look like to break out here? What would an M cross do? Well, it didn't do that, Booksy. It just went right up above. Okay, so what? Like, engage the brain. What does that mean? Well, it didn't follow your lines, so your lines must be all wrong. No, we don't throw the baby out with the bathwater just because the bathwater gets a little muddy. Like, that doesn't make any sense. When you have an idea of where that distribution level is and it just hits it early, it doesn't change anything else. It just means that, okay, it hit it early. You have to ask the question, without assuming that it changes anything else. What I meant is that you shouldn't assume that it changes everything else. What does it change? It may not change anything. There's a huge amount of volume here. That could be a breakaway gap. It's possible. That's one thing. The second thing was that we had a S-curve, and this is getting a little more nitty-gritty on, for the moment, on GME. We had an S-curve, another one that hit like right on the dot, right? So this S-curve was built out by me like in advance, and it hit right where it was going to hit, 25, 50 or whatever. It did what it needed to do. It pushed above that top. That was the big thing right there. And I don't need all this other little extra stuff for the time being. These little extra little ditties right here are unnecessary. But it pushed above the top, which was at that time 25.50. It made an advancement. My expectation at that point, if you recall on Monday, was like, okay, we're probably going to have a pullback, which we did. Well, did the pullback go as low as you expected? No, it didn't. I actually had a line here, and it pushed away from it, and it bounced off, and it just kind of pushed away and went sideways. And I posted I thought it was a really curious chart. I posted it on the Discord yesterday. It actually ended like exactly on the creek and the ice levels intersection, which is really strange. I don't think I've ever seen that before. It was like the biggest cliffhanger I've ever seen, where they didn't give any indication they were going to go up or down in the close. It was kind of amazing. I mean, I don't love that, but it was amazing. Like, it was an amazing chart because I was like, whoa. It landed right on the intersection. Like, you could not tell. It's just you looking at volume and looking at the overall setup. So the other part of this was like that S-curve was one part. Where was the second S-curve? Because I had two. This is a good question. Because when I did it inconsistently 2 different times. So the first one was like, bam, spot on. There's some kind of a backup. Does not come back down to 24. I kind of hoped it would. I was looking for that buy-in. I even had like a label set here. But the assumption on the second S-curve was that it would come back to 24. If it didn't come back to 24, and this did not, then the question is, like, where is it? I don't know. I don't know yet. And this is where we might come back and say, all right, well, technically, if that's the middle and there's going to be 2, this could be as high as 30.50. Now, this was a level that we had marked off previously. Why did you mark that one off? Because this was the second one I did. I did two. So the first was lower, right? That's the 28. And that leads you from a middle of 24 all the way up to 28. Well, we've hit 28 and we're going beyond it. The second one was a higher push using 25.50 as a middle, and it sets you up right here. Now that's the one I thought we might hit like on April 2nd before a drop. Being that we're higher, it leads to the question of like, does that mean we're going to just kind of sit here now? That's a good question. I'm not sure. I think you're going to have to look at the day-to-day price action. We haven't really done that. We're really just looking at the big picture. We'd have to look at intraday, like probably hour and below, and just see what's going on with volume and indicators and trends. If it breaks the trend up, guys, you're going to either look for a new buy-in or you're going to get out of the trade. It's that simple. Because if it breaks the uptrend, and it's probably super steep right here on the daily, and there's any kind of weakness in it, they're going to take it back down, bears I mean, and try to find a new floor. We've already tested one today, right? We've got some pretty decent supports down here around 27.50 area. That's a good place to kind of mark off and say, all right, well, if it doesn't drop 27.50, could it stay strong into this April 2nd date? Yeah. But that doesn't necessarily mean it's going to go all the way up. So we have to look at, again, big picture, like what does this entail? And I drew it out like, could this happen? Sure. It may not change very much at all. I had some stuff over here that was like way off to the side, but it could be very simple, right? We were using this as a guide to understand potentially how an M cross might happen. Up, down, up. You know, make it simple. Just a wave, right? Delete that. It doesn't really change anything. Keep it, delete it. You do whatever you want to do. It doesn't really change anything because you're still going to need to find some support in the zone that we're currently in, which is right here above 27.50. So if you want to keep it like super straightforward today, look at it as a momentum trade. If you're in the trade right now, check out some really small time frame like the 15-minute. You see the volume trailing, the rounded top. Okay, fine. Maybe there's going to be a pullback, but we really want to just kind of focus on like the bare minimum, which is where is the trend? We don't have much of a trend here, but it just broke. Okay, so then where's the support? Look at the recent tops and bottoms. The biggest one that's close by is probably this top, 29 on the dot, and then right below it, 28.65. If 29 doesn't hold, it's going to hit 28.65, period. Like, probably. I mean, I would say a high percentage chance. It's already broken down. Okay, it's already lost its top here. That doesn't mean it can't find a support and go again, and it could find it as early as 29, which is really few cents away. It's not far. Okay. So that's one possibility. The other possibility is it goes a little bit lower. And if it breaks at that point, you're really looking at creeks. And there's not much to look at here. It's just started. I would suggest this guy right there is directional for bears. So again, if it loses 28.65, then you're looking at coming back down again towards the floor. Now, there was a buy back in after the sell-off, and that's the next place I would look. It's this really small candle body right here, and you can see that the open, or the close and the open on the previous, where they match up, probably is a good place to estimate. And that's right around 28, like on the dot. Well, that's the target you had, Booksy. Is that a good target? Yeah. None of those levels are particularly different. And I think that kind of begs the question, well, which one is it? I mean, it's anybody's guess. In a retracement period, you can go back pretty darn low. Frankly, this could retrace all the way back down to the previous creek top and still be healthy in some regard. You know, it would be bad to come back through this creek, but where is that at, Booksy? It's really far away. Guys, it's like way down here. I would say it's like right there. So you're saying this come all the way back down below the previous... Yeah, I mean, it could. I would prefer to not do that. And I think when you look at the wick that was established, that's probably intentional to some degree. You know, this could be coming all the way back down to 25.50. Never going to happen. Never going to happen. Okay, well, if it does, is it broken or bad? No, it's actually fine. even if it came that low. It's ridiculous, but it could be fine. I would prefer in a breakout to never drop below 50% retracement, ideally. But we know that doesn't always prove to be the case. And 618, the 0.5 is at 27.50, the 618 is at 26.94. We just look and see whether or not those are credible as potential backup points. 27.50 seems pretty likely because that one has a lot of chatter back here. You can see when we broke down not that long ago, but it was in February. So, a little over a month ago, that acted as kind of that head and shoulder top, was like that 0.5, which again, blue zone. It's not really any different. It's again, very close to 28. It's pretty much the same. Healthy retracement would be fine. You'd be all right if that happened. So on a daily level, it's really straightforward. I would not be chasing it. If you didn't get in already, I'd be like waiting to see whether or not this creates a floor and holds. Because there's going to be a lot of noise out there and a lot of people saying the squeeze is starting right now. And I'm like, yeah, I mean, we could look back at this time in a couple weeks and be like, this is really where it started. That's fine. I'm not going to say that they're completely wrong. It's possible that this is starting. But I think right now that's a bit unwise because it really just did the move that it needed to do anyways from a technical perspective. Technicals had nothing to do with it, Booksy. It's all about you didn't know this Bitcoin. No, I didn't know anything about the news. I didn't know that they were going to do that. I had no idea. But I knew that 28 was going to happen more than likely if this broke out low, and it did. And then there's just a stretch right there that's going to be breached. We're not changing anything else right now, all right? I'm not going to sit here and tell you it's going to go to the moon. I'm going to say that it's very likely it needs to find a support right above where it is. If it can do that, it should be in good shape to continue. If at some point it starts generating signs of weakness, which would be lower lows met with kind of a weakness on up thrusts, that's not a good sign, right? We're going to see this thing work out, and I think the way that we had it measured, it's a little bit odd, but we had it measured out to be it was pretty straightforward. I think we had it measured out in a way that, to me anyways, it made a lot of sense, where there was I don't want to say quadruple, that's not the right word, quarter. It was divided, not quadrupled. It was divided into a quarterly thing, and we had it measured out in a way that it was divided pretty evenly, and it made some sense. The reason I'm bringing that up is because most of that seemed to kind of relate to this area around mid-April. And so my expectation is that this M cross happens in this little box right here that I've got on the screen, that it's in this region that we should be testing and deciding whether we're going to go up. That's a lot of time. And again, I'm not going to change that just because it had a massive 15% move on earnings. It's a great move. I'm happy for you if you're in it. And I had a very modest position, nothing crazy. But like to go from that to it's going to go straight up, not quite. We need to see the support built. Then we've got a lot of time. Really, in theory, just looking at this build out, if it does continue upward, there's still high risk at 38. I'm going to keep that. That's, I think, a risky area. Right? It's risky. It's too risky. Yeah. Sorry, you guys are like, what? That was from Lord of the Rings. That was a really bad Gollum. I can do a decent Gollum, but it's obnoxious, so I'm not going to do that. But yeah, this area right here, kind of risky, but this is also the stepping stone. Like you need to get there in order to get up. So you have to go through it, and you have to hold that support. And then this area up here. I don't know if it's going to look exactly like this, but this is how it would probably look if it breaks out going into, and it may be a little more bullish. Like it might be more rounded this way. Instead of being like U-shaped, it might be a little more rounded, not upward like that, but more round. Sure. But this is roughly what it might look like going into an actual big squeeze moment. Well, Booksy, I want to get in on that. I want to get from here to there. That's still 60%. That's fine. Like, do whatever you want to do. just know that if it breaks below this level at 2750, it's contesting that zone. It is posting a bearish contestment, if you will. There's an effort to then drive the price through to this wave here. And again, I'm just talking about, I'm getting rid of these lines because I want you to know that, like, I don't see it as any different. This is still, and I'll get rid of this box. This is extra boxes on the screen. I've already got it marked off. This is still like another possibility, and this is the bear possibility down. And it does measure out quite neatly to a similar time, oddly enough. So it may seem like these are wildly different, but if you actually look at where those are, this is still like mid to late May down here. And potentially you could get there on the inside or outside of this curve. That doesn't really matter. How confident you are on that curve. Pretty darn confident. There's not really much else to this curve right now. It's very straightforward. This is the cross of the curve right here, the cross up. So this is the creek. I'll make it really bold, and that's the creek. So this curve is very straightforward in my opinion. It's not like really hard to measure it. You can do it on your own if you want. I'm using a certain method to kind of make sure it's like pinpointed as best I can. That's basically it though. I mean, so if we can kind of maintain the bull side, we're going to head up. We kind of start regaining that bear side. Measurement wise, again, it's about where it should be. I mean, you look at the 50-50 here, roughly, and again, I'm even using like a little bit of extra. This actually goes down to June 3rd. It's kind of the opposite side of the coin. So I think there's an important like kind of notion here to like make sure that you're careful, especially right now in this zone. If it holds up, bullish. If it breaks down, I'm not saying it can't do some crazy thing where you're like, you just said if it comes down low. Well, that's where being a trader comes into play. Like, that's where you don't just use one thing. You look at liquidity, you look at the setup, you say, okay, well, what happened? Because this could be a push out that then turns into a reaccumulation, like after a decline. Like, you don't know until you know. That's not really fair to say. Do I think it declines then has a reaccumulation? Yeah, if it's bullish, that's exactly what's going to happen. You know, what if it just goes straight up? What if? It really isn't any different, because in the case that it goes straight up, the only thing that might change remotely would be this trend, but this is already kind of anchored on a secondary point. So I'm like thinking that I'm probably not going to change this very much anyways, this downward motion at all. Even if this comes up really high, I probably still keep that creek exactly where it is. The question that really we're trying to answer at that point is like, could it then break all the way back down? Well, again, it may not be the most likely thing to happen to go all the way up to 33 and then come all the way back down, or all the way up to 36 and then come all the way back down. I get that. But there's always a what if, and there's always scenarios that could lead there. I'm inclined to think it's going to, again, camp here and make a decision. That's where I'm at right now. That's my preferred overarching kind of setup. And if it does some kind of distribution here, I'm going to say, hey, I think it's doing a distribution here, and then we'll see. Okay. The rest of this stuff, the market on the whole, and I'm not going to go through too much today, too far. We only got on a little late because of my computer issues. I don't know, man. FANG is up, but it's been having some weird problems, so I'm not really sure what to make of it just yet. I actually got out. I don't see any of my calls, so I wonder if they triggered. I bet they triggered and sold. I bet they did. That's okay. So what I did is I rolled out. I had positions for 175 way out in like April, and they look like they're gone. I rolled them into 165s, and then because that's really where the top of this is, and we're really there right now, but that's where the top of this is. I was like, well, it should make it all the way up there to at least this like 165, 167 area. So I had rolled them out and then used a lower strike and there was more liquidity there. I went and grabbed something that had a lot of volume and trading, active trading. And so it looks like, yeah, it looks like it sold at $1, which is good. That means I made money on it. It's probably higher today, but I'm not going to look back. So I made maybe like on the rollout, I probably made like a 30% swing up. So I still may have lost a little bit of money because of the cost of the roll, but I needed to get out of them because the options chain was not looking healthy. So lesson learned on FANG, but it is moving up towards that target we thought it was going to go to. Tesla looks pretty crappy today, not going to lie. I had high hopes that it was going to get to this 298. It went to 291 in extended hours. It actually closed pretty high too. And then it went to like 291 in extended hours, and it broke this widening here. So there was a little bit of a widening. Not saying any of you guys are still trading Tesla or that it's like anyone's favorite necessarily. It looks bad. It looks like it rebounded and it broke back down again, which is kind of a bummer. So I'm yabbering on and I'm probably losing money. Yeah, I wanted to get out if it retested 280 and failed. Oops. It needs to regain its footing here. A higher low might be enough to kind of get it going, but it jumped the first couple creeks this morning, and I actually bought back in right here. So now it's looking like it's probably a bad trade for me because it went up and it distributed with a little head and shoulder motion. Heavy rain. Yeesh. And then we're going to look at this as like yeah, that's kind of nasty. I have to kind of look at it as a potential breakdown because this is a widening spread, and it looks like it's pushing below where that spread was widening out. So that blue line, it's not looking awesome. Tesla's a weird stock. It has moments where it looks super weak and it still runs. Like yesterday it did that. It was looking kind of crappy. You know, RSI makes it look like this is pretty bearish. The higher time frames had no divergence, hour and up. They looked fine. The lower time frames all had kind of weakness in it. And it did that pump. It went up right up on the cross too. It went right back up. And I actually traded from here back up. I mean, it was a great trade. I don't know, man. I didn't get to where I wanted it to go, so I held it. And then they rug pulled this morning. I got out with like a $10 loss or something really small. But I was hoping to trade a bounce here and see if it goes back up. It's not looking too great. We're getting a little bit of a widening as well, which is curious. Like there's a similar motion here and here. So we might see something, if it rebounds here, we might see a bigger motion up. There's a gap, obviously at 287 now. Don't you think it came high enough? I don't know, man. Maybe. If it broke down here, which is sort of what it looks like, it doesn't necessarily lead to like some crazy low. Technically, a widening that breaks down just goes to the place where the widening started, which I haven't marked off as 271. Like that's a likely place right here. It could go as low as 269, that level. It really wouldn't be surprising because it already technically dipped through the bottom. So is Tesla a good trade right now? It's so-so. Really want to see if it holds. I'm on the 1 hour, or excuse me, on the 1 minute chart, which is probably not the best. I want to see it a little higher. Divergence would be nice, or a higher low here would be nice. We might get it. But yeah, this looks ugly. You can see on like 6 minute, it's clearly like weak. But that's the nature of it. When it runs at a top like this, oftentimes it goes and it overextends. And at an hour, you can see that divergence is kind of missing. There's not really much there to talk about. There isn't really a divergence. You can see a little bit of a weakness here, but then it pushes up again. And you might say, well, yeah, but why didn't you just get out when it was up high? Good question. We always say that, right? But the truth is that when you look back at Tesla, and I know this is a bull period, so it's not quite the same, When you look back at Tesla, it has the ability to run, 10 to 20% on weakness. I mean, this is the same levels on the 1 hour right here. And the potential is clear. Like, if it's pushing up on weakness, that's fine. Once it breaks down on the hourly, it's usually a sign that it's done or it's about to be done. There's been times where it's broken down and still had a rally. And this is a widening. This is not quite as much. This looks a little bit more like what we saw, which is a push and then a secondary push that goes higher, and then it starts like crapping out, right? But there's not much else to it. I went and I looked at Tesla pretty extensively and was like, yeah, I don't really see a lot of consistency there. Once this thing's running, if it's bullish, it tends to stay overbought for quite a while. This looks really bad. Like, by comparison, you're like, it looks like it's broken down. It's gone, right? Yeah, I mean, it doesn't look great. That's what I'm saying. It just kind of didn't quite get there. Interestingly, though, and I do want to mention this, is that these two examples I just showed you back here, and there's more that I looked at, but these two examples that I showed, that hourly was overbought, but so was the 4 hour. And like, when you look at where we are now on Tesla, the 4 hour is not even close to overbought. So could Tesla still be in the midst of like, it needs to cool off and then have another pump? Yeah. And like I said, I would not be surprised if it doesn't actually hit here until closer to next Monday. It could have a pretty nasty sell down with some weaknesses and then still pump up. So first target met. We're seeing some consolidation. We're seeing some pullback on slightly lower time frames. Higher time frames, it's a mixed bag. This looks like it was just starting to cross up on the MACD, and it's just doing a pullback. You could argue that it's fine, and it's just going to retrace, hit a level, and go again. It's totally plausible. AMC, back to this one again. So I'm really disappointed with AMC today. I think of all these, it's the most disappointing. And I already got out of my $3 strike because it was up like $15 or something. Just terrible. But I bought in the money calls because I was like really not feeling this GME earnings push here. I did not like the way it's set up at all here. It looks almost exactly like what I drew the other day, which is kind of funny. But the thing that really bothered me about it was this right here. So when we went up and over, I said like, well, you would probably get like a series of like M crosses, right? That then break out. So it really did look almost just like that. And I said that like when it goes, if it were to go down, you wouldn't hold that. You'd probably come below and then like hook, right? That's like typically the way we see the two different motions. You'd hook between this level. Here's what I didn't like is that when it went up the third time right here, it pushes up and it wicks down really low. It never breached the top. It never went above 310. Once again, it kind of got stuck on 310. Like there was some kind of a wall there. So I'm like, okay, well, it didn't make a higher high. And then it actually comes down and it closes low, below the previous top. So notice that the push up from the previous one kind of starts building out and it goes and it just taps that low at like 305 again. But the breakout here starts at like slightly higher. Now it's like, well, that's all 305, I know. But it's definitely higher, right? So to me, I look at this and I'm like, that looks a little bit iffy. Like, why are we going all the way back down to 305 and then we're technically dropping beneath where we did find support here? That looks like a weakness to me. Well, not surprisingly, unfortunately, and I was saying it on this Discord, like it doesn't really confirm unless you're above 314, which in this case I guess is the 1 hour 180. I didn't necessarily know that when I said it. I just said that's where it would be. So this is the creek jump. It dipped back beneath that creek, breaks out this morning, goes all the way up to 317 like it's going to do something fun, and then it drives back through. Okay? Now, again, you might be saying, well, does that mean that it's just done? Like it's not going to possibly go here? And I thought you said it could go up to like 360s or something. I think what this means in the case of AMC is that when you look at this on AMC and you look at it and you say, okay, is it bearish? Is it bullish? it hasn't yet dropped the creek, but it has made some kind of a widening move, 1, 2, 3, 4, 5 here, that seems to suggest that it's not particularly strong. And then when you look at the big picture, you definitely don't want to see this as a 1, 2, 3, 4, where the 4 opens and then closes beneath that support. And that's kind of what's happening. So it's having some identity crisis right now because it technically just looks like an upthrust at this time. Well, what prevents it from being an upthrust? If it's an SOS, and this doesn't typically happen with an SOS where it's just a giant wick like that. Usually there's consolidation and then it retraces back down. Okay, so right now it looks more like an upthrust than an SOS. But if it's an SOS, it would come back down and not break back through the creek. If you have a backup, you can have a backup that comes down pretty far. There's 2 spots. So one is this big pink line that I've drawn. That's a localized jump. There was a jump that happened right here. You can see it pretty easily on RSI right there. Okay. So arguably I could be even drawing this like significantly lower and saying it's like way down here or something like that. Right. All right. So you're saying come all the way back down to like mid range. Yeah, basically. When I look at the big picture, I don't really like the idea of any backup coming below 50% of the range. That's usually bad. So we're really talking about $3 or 303, and that's kind of how I had it drawn before. I think I had measured it out. Ideally, there's another creek that was pushed, and that's this one. There's 2 tops that took place in February, and that was right around where we had earnings. And I think those are really defining what we're seeing right now. I'm not using extended trading hours. I'm not going to flip it on and mess my chart up right this second for it. So if you're using extended trading hours, you might see this a little differently. But I'm seeing that as like a possible cross up on like weakness. And if it is, again, you really don't want it to go back below pretty much right where it's at, which seems like a big ask right now. And if it did, it'd have to break back out again because technically it'd be below the creek. So that yellow line coming down as the crow flies is like 305, which makes sense because it's right where the other levels are. But if you came down to 302, yeah, you'd be holding this one. Sure, it'd be a creek backup, but ultimately it would be imperative, like 100% necessary at that point to almost like immediately kind of come back out and over. And there were a lot of questions that I think we were talking about in the Discord group. Some folks were saying they didn't think anything good was going to happen till Monday. And I'm like, yeah, maybe not. I don't know how they could do that, but this is maybe one way you could do it, is by building out into a cross up into Friday and not actually taking off and just kind of keeping it around 3. That wouldn't be entirely off. And we could make an argument it's holding the creeks or it's re-advancing. I'm not, again, really liking that setup right now. So ideally, and I feel like every time I say this, it doesn't happen. Like I always say, like ideally it holds this level and then that level breaks, right? That's always how it is on the stream. I'm like ideally it doesn't go below 305. And it actually just kind of holds and then builds out again. And this retracement is just a reset of the move and then it builds out again. But in reality, if that candle holds, especially into the end of the day, it's not going to look pretty. And I'll have to look at it on like the 4 hour and the daily when we get to the end of the day, but that would be pretty ugly, in my opinion. I don't think it's going to be good. So it would not be a great setup on the whole. So we want to be really careful when we look at this kind of stuff to not be overzealous, but also just to kind of keep in mind, like we haven't quite made the right moves yet. And ultimately, like maybe it holds here and I am right and it's not going to be horrible. I am right. And what I mean is I'm right that it holds and we're strong and we just kind of build back out and go. But the way it's set up is just kind of ugly, right now. And I wouldn't be surprised if this is an attempt to drive us back down to like the 296 level again. The reason for that is I have this curve drawn, right? And I like to use the curves for creeks because they are supposed to be more like fluid. Like there should be a way to find a support here. And when the stock is bullish, you will see that. You'll see like 50% retracements or this or that on bigger moves, and they won't go all the way back through. But the other way to draw a creek here is kind of just like a straight line, and a straight line looks pretty bad. Like it looks like it comes all the way back down to near the floor. And when you do a 50-50 off the top to that level that was contested right here that we kept wicking below right at 309, it certainly kind of begs the question, like, could we just go straight through there and just keep going down? Like, yeah. And I'm not gonna sugarcoat it if that's the case. You know, I prefer to see it build out strong, but you guys are like, well, that's not necessarily bad because it still made a higher high, and yeah, I know. One of the things I required was that we pushed above this top. We did this one just barely right here. And I said, that's good. It looks like it wicked above it, but slightly, and it did. At this point, we've made a higher push. So couldn't this still be like an inverted head and shoulder motion? You know, we're going to get this kind of push down to like 296 again and double bottom and then rip. Yeah, we did something similar to that back here where we had a kind of a nasty distributive looking motion, but it actually just came back down and double bottomed and it flipped out into a change of character. And that's happened before. This is a very distributive looking top because the first thing it does when it hits the top is it comes back through the creek. Well, obviously it wasn't distributive. Well, no, because it made a double bottom. But that's when we were like, hey, this normal. Like this changes things because it puts it up in the air. It didn't make a new low. It held the floor and just rebounded. And then it turns it from like, oh, it's a bad distribution top to no, it's going to go try again. And it made a support. And then it makes a higher low and then it pumps. Okay. So is it possible that this is this or that? Yeah, of course. And I don't like those kinds of setups because it would very much to me look like a distribution to start. But sure, it's possible. Like we made a higher high here, it could come back down and slump pretty low. But if it then makes a double bottom, you're in a position where, okay, well, we can leave from 296 again, which has been a pretty long-standing support down here. We've built a lot of time out on 296. 1, 2, 3, 4, maybe arguably 5 times around 297. So, you know, it's not the end of the world. But if that happened, we'd have to kind of look at this, I don't know, it'd be weird. We'd sort of have to look at it the same way. We'd still have to get above this top. It'd probably look like this because they've been using this guy as like a midline. So this would be like a big flush and then a pump back up. So if we went with 296, and then maybe it goes pretty high. And then you'd see it like back up and hold support and then rally. I don't know how this works out into April 2nd, but that's the only way I could see it low. And I thought something like this the other day when it wasn't quite going and it wasn't streaming. I was like, I wonder if it's going to drop early. And I think I posted a little chart that said, you know, we could dip down to 3 first and then go up if GME does a dip first, but it didn't. So anyways, I'm not a huge fan of any of the charts today in particular. I looked at, gosh, IWM just off a cliff. Man, that just really bugs me. And it was a widening, or it was a narrowing. It looked like it could go back up, but failed today. It really was all right here. This is like an up thrust. Yeah, I can't see that. IWM went from looking really bullish to looking kind of crappy really fast because it had a build out that looked pretty good. It was making higher lows, higher highs, but you can see the divergence there. This is a 3-minute chart, so it's obviously low time frame. But I was like, you know, there's a higher input here because there's one that was kind of low, it looks like at the top, but there's another one that looked a lot more bullish to me, and it was going backwards to, I want to say it was like here. And it used like extended hours and stuff. Like that one looked pretty good. And I actually thought we might build back out and hit that 214 even this week. But instead, what we see is pretty evidently like a cross down. There's an M crossed low, and then it pumps up, and this failed. That's all there is to it this morning. That's a failure. You can see right there, the middle, this is the marker I had. There's a reason I have lines on the chart that I have. That's right here. So this is a rejection, tries to dip low and then pumps back out. And I had mentioned that this was like a head and shoulder technically on some level. Weirdly, it doesn't commit to the head and shoulder right away, but I had taken this as a shoulder and I said, well, if it breaks the neckline here, it should be heading down towards this particular support, and it does. You can see it's marking off both of those on the way down. So that was the bear trade, in my opinion, right down to 206.84. But weirdly, it goes up first, which is really strange. There's like this big up thrust motion here back above, which is really odd, all the way back to the top again. I'm wondering if it's because they didn't quite get there and then they just kind of ran out of steam. It looks like that. The volume kind of dips real low. Bears kind of ran out of steam and they're like, well, let's go back. And they went right back up to grab that level. That's a bummer, man. So big couple days for IWM and SPY just turning kind of south. I think it's just, again, an advancement on weakness is going to have like big drawbacks. This M cross looks okay, backs up, advances again. This just looks really weak to me right now, but I don't necessarily think it's done. When you look at the RSI here, and I know it's a 3-minute chart, but it's done a pretty good job of predicting kind of where the bottoms are and the tops are, like overall. So if I look at this as M1, which is the first break, we may just be in for another like wider trend here. And I think this 22-degree angle matches the roughly the uptrend anyways. So I may have had that on the chart and taken it off for some reason. Yeah. So we may be in for a bit of a narrowing here that I don't know. Maybe it doesn't ever end up getting very high at all. We'd be lucky at this point to see like 212, I'd say. There's other things that are being rejected on, but this has to kind of have a decent reaction first, build out and break out above. It landed on top of the creek at first, but it's already kind of pushed below it. So I'm not really feeling that. I don't like that it's below it. We haven't dipped below this trend, but it did it before. So I don't know. We'll see. Everything else here looks pretty spot on to me. And this is kind of just like what happened with AMC too in some ways. We were just talking about this. There's like this big motion up and then it drops right back below, almost like a shouldering motion. This is the main creek. It's being met right now. So it followed it all the way down from the top. And it looks like the breakout would probably be pretty late if it happens this week at all. So this is another week of like early big moves, and then the rest of the week's just kind of crap. Like contention. It's kind of stinky. I wish it didn't do stuff like that. I wish the market didn't do that, but it does. So, man. So yeah, it's kind of a bummer. And I had traded back into Tesla waiting for like a good rebound. I'm going to watch that one pretty carefully because I got a decent sized position in it. I'm not super worried about it just yet, but we got to see certain things happen. It's like down 10%. It's not that bad. For a call, that's nothing. But yeah, I mean, this obviously broke down, came back to the widening bottom here. If it continues to lose momentum or generates like a hook right here, I do think you could probably come down pretty low on Tesla. And I'm watching those in tandem with some of the bigger stocks. I'm watching them in tandem with your SPY and IWM kind of stuff, which are your small caps. So this hit the first target, again, like no problem. And then we went to the second target. It didn't quite get there. Everything kind of missed. So what I'm thinking is, and I think we adjusted this actually, because we said that it may not be completely wrong, but what we might be dealing with, it did go up here in that way. What we might be dealing with is a hit that one. So it definitely worked out on the less steep trend. So what I'm going to do is delete these markers real quick. Yeah, I knew that was like an SOW kind of thing. So it did hit the 1 hour 180. It just rejected right off of it. And it hit that 575.80 mark. So just not quite up enough. And I said 583, and I still think 583 could be met. There's a lot of reasons for that, but right now we're just taking a nosedive probably to try to find some buyers again. So it looks weak. It looks like it kind of topped off here too on RSI. I had it waving up, and then I was thinking at that point, it looks kind of janky. I need to redraw this wave because I was thinking at that point the wave would... I was counting the waves. Now I can't see where it was where I had it like implied. Oh, UPS is here. They're dropping something off. Hang on a second. UPS? You know, mail. It's like Mr. Rogers. Let's go get the mail. I'll go meet him at the door. Hi.
There you go. Thank you, sir. You're welcome.
Stay dry today. Oof. Thoughts on the GME IV? Like implied volatility? What about it? It's probably spiked a good bit. Is it dumping? Ivy barely moved on a price expansion of 15%. What are your thoughts on that? I think that might actually be good. If the IV contracts and the price is expanding, I think that's a positive sign of a potential squeeze incoming. I don't know why I'm saying that, to be honest. Something in the back of my head is telling me that that's right, but if you guys know more about IV than I do, then please share. But doesn't that sound right? I feel like when the price is extracting and IV is expanding and the IV is contracting, it's not really following through right away. That could be a really positive sign if the price continues to close higher. But I also know that when I think about contraction in the price, that's usually what I'm thinking about as well, as like volume and price contraction. I would think implied volatility would have similarities, but I don't think it matters as much until the daily, which is usually the case with something like implied volatility. So wait till the day closes, see where it closes, and then see what happens with the volatility in the morning. Because I feel like there's often a disconnect between the two. The same thing happened on IWM. Like the IV didn't follow through for a good bit. So I had, I think I had tracked it on like Fang too. There's all kinds of weird little things that happen like that. And I have an IV chart that I use sometimes. I don't find it gives me a whole lot of information though on movement, so I don't use it very much. It feels very lagging to me. The best way I can use it is to use it comparatively, like, oh, this is what happened before when we ran, or this is what happened when big run-ups happen. So just do a kind of a comparison between the two seems to help when you look at it within itself versus other regions. But otherwise, I don't really find it as an indicator that's particularly useful. Like, because the IV very rarely breaks out when the price breaks out. It's almost never the case. I mean, it's options to some degree. We talk about things I honestly just think it's a time frame issue, though. That's what I'm trying to say. I feel like the way that those things are calculated, they're not calculated on the same basis, and it's hard to tell what the changes over time on a small scale, especially. Like an overnight move may have no change, and that doesn't necessarily mean it's not going to change. Because I want to say that because the one that I use had multiple ways of calculating the IV, and some of them didn't use anything beyond like a larger time frame. And if you tried to mess with the range too much, it really screws with the IV percentage. So, yeah, where are you getting your data from? That's a good question to ask. Like, where are you getting that from, the IV? Are you getting it from like a external source? Or are you getting it from like an indicator? I'm gonna wait for your answer. I'm gonna get some coffee. I'm not. Yeah, I kind of talked about Tesla a little bit, and I said, oh, it looks like it's going. Somebody said it looks like it's going straight down, or yeah, there was nothing wrong with that candle yesterday, but it was really low volume. That's the only thing I could say about it. And then it has this weird after hours M cross down. I don't think the move is necessarily over. I'll just kind of bookend this right now because we just talked about this a little bit. I don't want to continue on it too long. I don't necessarily think the move is over unless it hits like 300 up to about 315, which is the 4 hour. I think it's very possible that it gets there. The 4 hour is not overbought yet. And even though the 1 hour is overbought and did look bearish today, normally what we don't see it have a significant turn on a breakout like this unless we get to that. Like we don't have the final move, I should say, like the final end result until we see some of the higher time frames catch up. So it'd be strange if we just didn't go up. Maybe this is a good example, like back here. This is like an early breakout that rallied, and then it has a pretty deep retracement. And ultimately, you can see like the 4 hour, it doesn't ever come and make a new high in this particular time period. It's a range. This was in September 2024. I'm just using it as a really quick example. It might be a good one to use, where there's like a rally that's not going to ultimately go up to a new high necessarily. And you can see it gets cooked a bit, but it didn't ultimately like finish with the upside until the top. I'm trying to see maybe if there's another example where it doesn't do that, but this is down. This is all down. This one, I guess, is an example where it didn't do that. So in this case, this was in the midst of a downtrend, and 4 hour in two instances back here. This is 2023 in August. In October 2023, Tesla gets up to this is like retesting its 4 hour moving average. It's not below it. So that's important to consider. It's technically like still in the midst of testing it. It just dropped it. Yeah, it gets overcooked as soon as it hits the 4 hour, and then it still pushes up a little. This is in the midst of a downtrend, so it might be a better example. But still, it gets to the top. It gets to 70. I don't know. We're not there yet. Like, it's only at this like 58 level, which is interesting. I had this anchored because of the 15-minute time frame, because Tesla has this weird thing on the 15-minute when it's going up. And again, this is probably not a good place to use it because obviously it wasn't. This is what pissed me off about yesterday. Excuse my language. Because it actually, historically, on the 15-minute, it bounces on 58 if it's going to continue. And it's exactly what happened here. And I'm just amazed at how like perfect it was, but then there was this massive rug pull today. This bounced right where it was supposed to bounce. And it's historically doing this a lot. So if you guys don't know about this, I didn't know about it. I just kind of learned about it. That 58 mark, it's not 50 on the dot. That 58 mark on the 15-minute is like wildly used, like crazy used on Tesla. I'm not sure exactly what it is. Maybe it's like in the fib levels here. Maybe there's something important about it. But in those early like examples I showed that were they stay above that 58 until the breakdown. It's very strange. So for some odd reason, 58 on the 15-minute RSI provides a support and resistance for Tesla, like for a long time. Like it's being used all the time. Like you can see it right here. Very odd to me. I'm like, that's a really strange little phenomenon. Maybe it's just a self-fulfilling prophecy kind of deal. It broke down, but the reason I had that on the chart was because of that. And then when you take that up to the like the 4-hour time frame and you look at that 58 level, we're kind of like sitting on it right now as well. So there seems to be some kind of an importance to that zone. I'm just curious, that's all. If you guys ever see something like that and you're like, hey, that's pretty interesting, point it out. This still looks kind of bullish to me. Like it looks like it could still be going up, even in the midst of a pullback. But the greater question is not like, can it pull back and keep going? Like, of course it can. Of course it can. That's just the stock market, right? The bigger question is, where does it pull back to? And I mean, that's what I'm trying to say. Like, it could get kind of nasty before it gets better because there's a lot here. This move is pretty massive. And the 0.5 for this move is 265. The 618 is all the way back down here. It would be back down to like 260. Let me see if we're near anything else. 270 is the 3.8. We haven't even hit that. So 277. That's interestingly like kind of right where that level is that we need to get over. I was talking about that earlier today on the Discord. I think I mentioned something about that region. There is a trend right here that we lost, and it kind of builds out, and then right here, like right at 277, you need to just see that breakout. But I was nervous about it not hitting here and jumping. This is something that happened once, twice, and then this is the third time it's happened, but it didn't recover it. So that's not a good sign. And they actually rejected right off of it. Yeah. If you made me guess, if you said you have to take a guess, Booksy, you can't just pit around, I'd probably say that if that's the case, that this could end up becoming a kind of caddier setup that takes us down to 263 or 262, which is pretty low. But then after that point, we reach the 15-minute moving average area. We're kind of back to square one in some ways, because I know it's a deeper retracement here. It probably would reset a lot of positions. I don't know. Let's see here. This also looks reasonable. This is a low trend. So if you lose the higher trend, you almost always see that stocks will go back to the low trend. So that seems to be what's in contention right now. Is happening right now. Is that we lost that. It's kind of a bummer. It looks like we lost that higher trend, which is where you'd see like cat ears. And then this is pretty dang low, guys, because like back down to like 250. Tesla's in a spot right now that it probably hasn't been in a long time, which is just clear, overt bearishness across the board, not just because of like political things, but just in general on its company. A lot of questions and dilemmas. Factory recalls of their truck, selling lower numbers, just all kinds of stuff, you know. There's a lot of chinks in the armor right now. I mean, it just looks kind of bearish on the lower time frames, which is sensible. So, yeah. So I'm going to say that if Tesla can't recover right now, it has another like head fake here to like 275. I think it's going to be in a bad spot. I think we're likely going to see it drop to like 260s. And I'm really watching closely like 271.28 down to 269. Really, it should be like 270 right on the dot. But yeah, it looks like it's in contention. It shouldn't even check that trend. It just kind of blew right through it. That's not a good sign. It could be a little bit lower. I hate doing this because I think the best thing to do is to use the trend just before it breaks out, which is this one. But I got to be careful as I don't want to use the trend. I don't want to combine them necessarily because there's actually a second trend that's built just after it breaks out. And then there's one in between. It's like 3. So there's one right here, which is like this early trend that's built before it broke out. That trend is often used in the market, but then it broke above the creeks. And while it's doing that, it develops a steeper uptrend with these extremities. But that's in the middle of a creek jump. But then really, if you look at it carefully, the main trend is afterwards here. This is the one that's established as it's already broken out and crossing up and over. This one's a little bit lower. So we're in kind of a cluster cuss right now of breakdowns. But I'm going to say that it could just find a higher low. I'm going to get rid of these. These are kind of redundant. I don't really need these right now. The ones I don't need, I need to just get rid of. Yeah, this one's probably not correct. I'm going to use something else. Because that was just for the short-term break and the pop. I don't know. It's just struggling. I mean, unfortunately, when this isn't a bear trend, it can spend a lot of time man, this could come down really low, guys. You can spend a lot of time kind of working out the kinks on a RSI hit. Like this was divergent for a really long time on 15 minutes. So it really wasn't a good indicator of buy-in. Really would want to probably just default to using higher time frames. Leave it at that. So I think this is probably as good as it's going to get, though. These 2 markers for now. If you lose those, you're likely in a place where you're going to capitulate and come back through pretty low. Those are inverted creeks, basically. You know, they're rising, they're below it, so they may be like, oh, it's just a support break. Yeah, but if we were looking at it from the other perspective, you know, we would say that, like, there's nothing really else here. So that's a big question. You can go back and you can look at the level of like 262, which is what we're doing. And I already had this one on the chart anyways, but you could look at this at like 262 and say like that's probably a stopping place potentially. But if you look at the creek itself, there's nothing else here. Like there's no other outer creek extremities. And that from a wave perspective means that if this is a bottom on the bear side, right, when we flip the chart and it reverses, and it would be pretty nasty if it did, because I would have to look at this as like an SOW potentially inversion wise, which again kind of leads us to like the next question of like, could it still come back up? And I still think the answer is yeah, it could. But for now, I would say like, yeah, if it breaks out here and it's doing it, those are the 2 tops. Trying. This is like a reverse break. So it's a bearish break. Then you're likely going to see it pop to where this widening started, which is up here at 270. That'd be like the first step. I'm saying up, but you guys get my drift. Honestly, probably coincides with this, again, creek hit. But if it continued after that point, I think you'd be in dire straits. Like, I don't think you'd be in a good situation if this happened. That's pretty much just like a reverse. I mean, it is. It's a reverse S curve. So you'd be coming back to that 15-minute moving average pretty quickly. Yuck. So who has the advantage? I mean, bears probably have the advantage right now. It didn't take much to flip it around. Starting to look like this pink thing that I did. I was expecting it to be later. This is Friday, though. This is kind of interesting. So if you look at where this weakness goes, it comes down, and this intersection over here is on Friday. That's kind of fascinating. I wonder if it's possible it just doesn't go below 262. Like if it gets there a little bit late. Where's that middle at? Or a little bit early. Yeah. All right. I see it now. That does look like the middle. So I think I drew it wrong. Right there. It's kind of hard to tell sometimes. I was drawing it out to this blue box, but that blue box was based on this intersection, nothing else really. So yeah, it looks like I'm gonna get rid of this one. It looks like $275. We'll just say 275. That's easier to remember. So shallow S curve, we'd have to get back above 275. That's the key level here. So if Tesla comes back over 275, it's probably gonna, and it can hold there, it's probably gonna be bullish. If it stays below today and it closes low or continues to drop, it's pretty straightforward. First, it's gonna hit like 269, 270 area, and then, 270. And then it's gonna be more than likely, this goes all the way back to, I mean, it looks almost too easy. But it looks like it goes all the way back to 262. Too easy. Might be a good place to play like some kind of like a hedge or something. This is Thursday morning. I don't think it goes any farther than that. GME's kind of pushing back up. It's at 29.50. Market Chameleon is where you got it. 30-day IV. So right here, yeah, that's definitely going. It's like right on in line with the S curve. And that's a bummer. Probably gonna hit 262 more than likely if it continues the way it's going right now. It's pretty much a guarantee. But I think the good thing about that is that it might hold the 15-minute EMA. I wonder, reaction wise, this should come right back up to the top here at 270. So it probably comes right back to 270 again. I don't know if it's going to get anywhere this week. I wonder though, because like, let's say that did happen, it could be building out like a larger move. Wave crosses are strange to measure in advance, but you can try. We'll be using like this one, I think. And then, so that actually terminates here. And then the other one, which is going to be probably already on the chart. I think I already have it. That's that. I don't know. That lower one is tricky because it goes way low when you do that. Pretty much goes back to the top of the gap. That's not really helpful. So yeah, because of the way Tesla moved today, it's kind of a bummer. If it gets back above 275, maybe it's a bullish trade. If it's not above 275 right now, I think it's very likely coming back to 262 short term. And then potential for an auto reaction there back up to 270. Probable, I should say. And then we'll see. They have to form a bottom at that point. Some higher low. And we're really looking at Thursday, maybe late Thursday going into Friday. So that doesn't really give me a lot of hope. Weirdly, I think at that point, it kind of does favor the swing back up, because if you look at the big picture, it did punch through the creeks. I mean, this pink one may seem like a little arbitrary, but that's actually the outermost wall that we have. It's the extremity. If you pick the two top most outer walls here and here, I've got them marked off and anchored. That's that. The blue are just parallels. They can be adjusted here and there. So it really looked like it had broken out. I mean, this looks like a clear and evident break above. So I'm thinking it's shouldering down in like a mirrored fashion. You can see that 1, 2, and then push 1, 2 to try to like shoulder down low and get to that drop. Doesn't necessarily have to keep mirroring out. I'm just saying. If it did, you wouldn't like it, because it probably would do I don't know how we'd even do that. We'd have to measure out the head and shoulder motion on an angle. It's an ugly head and shoulder. I don't know where the neckline is, what I'm trying to say. Not sure. These things are a little ambiguous when they're like sideways. It's kind of there right now. I'd say that's probably it, or close to it. I don't think it's this one. That's a little too steep. It's not saying it can't be, I just don't think it is. That's just like a lower creek to me. It doesn't look right though. Mostly because I think that usually that parallel is pretty consistent on tops. If you look at where those wicks and the resistance are right there, they're kind of running parallel to that pink creek. So they're using that creek as like a way to drive the price up and then sell off. It kind of makes sense. It's in the right spot. Yeah, it was pretty close. Maybe. I don't like it. I don't really like it anyway. It's kind of ugly. But head and shoulders can be at an angle. They don't have to be like straightforward. So, dang it. I jumped on the stream right after I got those calls. I should have just said a stop. The streaming really screws me over. I've said this before. I'm not trying to make excuses. I'm really not. It's my responsibility to take my own positions into my hand. But sometimes like I'll get the setup going and then I'm just like, oh, I forgot to do this or whatever. Forgot to set a stop there. Now they're down 20%, which kind of sucks. So we're eating back into profits from earlier in the week. The original position that I had was a huge, huge win. So I don't want to just chew away my profits trying to overtrade it. I should have just left it alone today. I knew it could have been going either way. Got trapped. They got me. Got in at the wrong time. So one of the things I'm kind of curious about here, the angle of descent is always of curiosity to me. Really, this was a bad trade as soon as it dropped back through this creek right here at 276. Because once it pushed back below here again, it's kind of confirming what the fears would be that it's not going to continue right now. And even if it does have a bounce, it's going to go low. And this is ugly, dude. They're flush. There's a big flush. 6% down on the day. It's nasty. Probably going to have a window of opportunity here because it's on the bottom. These parallels are kind of driving the price right now, and they look like they're doing the operators are doing some work to really using these holds and sell downs. Yeah, I think we're in the right zone. This is a weird chart. So this is where things get kind of strange. In a complex head and shoulder pattern where you have multiple shoulders, there could be something very similar that works out all the way back, which is really odd. I don't really know why exactly that happens, but it does happen quite a bit. The other thing is that in a complex head and shoulder pattern, sometimes, depending on how it sets up, that breakdown might not be like super clear. Right now, I'm kind of curious because it looks to me like it was pretty darn clear right here. Again, when it dropped back through there, should have been like the out period. But I'm curious because, and we're just dipping low. We like didn't even hold that support at all. It's pretty weak looking. Tesla's getting put on the butcher block right now. Buyers are not stepping in as much as they could be because there's supports there. We could be holding it. We're not holding it. It's a question of, always a question of liquid. Are there buyers? Are there sellers? Right now, there's not a lot of buyers. We were very confident in this. This is losing 3 days worth, after Monday's big run. 2 days worth of gains in like half a day. It's ugly. I think we're probably going to jump this creek early, and we'll probably see it pump today for a bit. I'd be curious to see if it comes back above, up to like near 275 one more time. I've already had that on the chart, but I think that's likely. I think you'll see some kind of a backup that looks like it's jumping over, and then it'll make a decision probably near the end of the day as to whether it's going to go or not go. But one thing I was thinking about was like this has a kind of a bizarre mirrored pattern, which is really strange. And if it's a complex head and shoulder, like technically that could keep going, which is bizarre to think about, because then you could have some kind of a massive upthrust pretty much right here. So instead of it stopping short at like 275, this could go all the way up to retest this. I don't know where it would go. It's a really weird move. Maybe back to 280. Yeah, it's possible. It's just a bizarre move. There's probably more information on a smaller time frame here in this case. I'm going to look at it. But if it comes back above this top, it changes the dynamic, because the S-curve is then potentially failed. This is too high. Then it's like a shallow S-curve where it didn't finish, breaks out. I mean, you could still have technically more going on here with downside, but you wouldn't call it like a direct S-curve right there, straight down. This one wouldn't be intact. I don't know. How high did this thing go? That's back up to 280. Let's turn on extended trading hours for just a second. It's kind of interesting to me. And actually that works pretty well with extended trading hours on, because that doesn't, this line, this like little yellow arrow I've got cutting through it all, that kind of indicates like a more of a middle. And it doesn't look quite the same in regular trading hours. It looks like it's really low. Like it looks super low. It doesn't look like it's part of the middle at all. The middle looks like just this liquid middle. So you maybe would take this up like a notch, and that's where it would go back to. So like retest the liquid middle. Instead of being on the bottom here, it's really more in the middle right there. Ooh, that's weird looking. Sorry, I'm just talking to myself. That's way up there. Seems a bit high to me. These parallels are pretty consistent. So why is it like not, did it just not come down enough? It would have to start from here if the parallels are consistent. It wouldn't actually break out here. It would hit like 268.50. That's interesting. Or 268.62. $267.54, opened at 268.62. was at 268.64. Well, this is kind of wishful thinking on my part, but it would be logical to some degree. That works much better if I can find the original trend I had. That's much more consistent with what I would expect if it's going to have some kind of big move like that, because you wouldn't expect it to pop up significantly higher. So this would be like a test back above this top, which does potentially change the direction of the chart. It's really not that different though, because then the end result is still the same. Like this is still going to be like the same thing. It's just higher up, which is always fascinating to me, because like you'd think that they would be somehow like different if like the patterning rather would look different, but it almost always still looks the same, because this was like a kind of a double top 1-2. There's definitely the right cross in there. There's a 1, 2, 3, 4 right in the middle of these two ears, and there's one right in the middle of these two. So you'd still see the same thing. This is still very weak looking by comparison, but I suppose you could say that that could happen. Maybe this is the way that they really break it down into the end of the week. That almost makes more sense to me, to then do something like that. And it's ugly as all get out. I don't see stuff like that very often. But then Friday would be a little more sensible. It just depends on where you want to trade, I guess, and how much bulls you'd want to shake out here. But yeah, if you need to do that move or not is a question of liquidity. All right. Well, this could still move back to 280 then, weirdly enough. I'm going to leave it at that for now. In the meantime, it's just following a potential S-curve build out, but I don't think it's made any kind of definite cross up over regardless. So if it hits 268 and then you see a big move up, passes 275, it's probably going to go ahead and hit 280. It's going to move like $10. Boop. It doesn't have to be that severe, but I think it might be. I'd be curious to know if it doesn't make a higher high here at 279. That'd be interesting to see. Yeah, I mean, S&P 500, looking at it right now, I don't really see any reason to be overly bullish. This isn't really anywhere. It's kind of just in the middle. You just need to find a higher low support. There's a previous top that it's come back to, so this could be a good place to find a support. I could give a little bit more evidence to the idea that Tesla might find a spot soon, and some of your other big ones that were coming into a place of previous tops. Now we're in a resistance, or excuse me, previous resistance. Now we're approaching it again as support potentially. And it's really right there. I mean, there's not a huge amount of range here, but it's right around 568.50 maybe. Looking at GME, it's still holding up pretty good today. It made a pullback, broke back out again from that little downtrend juke. that it made to the downside, just kind of a fake out. And then I don't know. We got to wait and see what follow through happens, if any. It's pretty straightforward. Yeah, it dumped here, and we were saying like, okay, well, you would just wait to see if it can find support. I suggested it comes back to 28.65, I think. It came to 28.61. So the booksy's never right kind of profits can come around and get me for that one, I guess. 3 pennies. It is a importance because it went lower than the previous supports here. So this hit a low of 28.63. This hit a low of 28.65. So it actually held higher. And then this comes back below both to 28.61. So that's a liquid test, which means that it dipped below that liquidity and tested it. It didn't hold. So if it's bearish, it's going to be brought back up. You'll see, some kind of a weakness, and there'll be like a high volume sell down again. If it's bullish, it needs to do a reaccumulation here, but yeah, I don't know. They went up to make another buying climax after this drop back, so it's a mixed bag. I would say normally that's not a good sign if it makes a new low like immediately, but this is kind of a widened setup anyways. So like in this particular case, it's like halfway point on a range. Does that make sense? So if I look at this from that point of view, yeah, like it could be a little bit weak. It doesn't really mean much because this could set up still much larger a range down to 27.50. So right now it's kind of a whatever. And also, GME has a weird tendency to do this kind of like quick spring and go motion. So don't hold me to this one as harshly as others because I've seen GME do it and I'm like, wow, I wish AMC would do that. Because it never does it. Where it just has like a quick double test and then just goes. So yeah, you're just kind of watching to see if and how it approaches this. If you see any kind of a wick up here that comes to the top and then drives back through, that's probably going to be pretty bearish. You don't want to see that. That's more than likely going to be a bear sign. And then you're going to be dropping. You're going to, at that point, almost without fail, you might do a UTAD where you come back up again. But almost without fail, you're going to come back through that first SOW. Almost without fail. So I can't tell. It looks like it may have wicked above that top. Yeah, all right. So it already kind of did that. So it also pushed resistance here. So it's a double liquidity test. So you're pushing the top, pushing the bottom. So the market's just testing the waters to see where the buyers and the sellers are. There's not much of a trend here. It's 2 lines, 2 points. This is a really small time frame, so yeah, there's not much here to look at. Meanwhile, AMC just kind of chilling out, and it did break down finally on this trend support, which figured was probably going to happen. So we talked about how really ideally it holds 305, but I said it's probably not going to do that because I said it would be ideal, and it never does it when it's ideal. This was a widening into the top, which broke above high, but then immediately comes back down beneath 311, which has been a pretty big problem for us. As an advancement, it could be fine. It's now made a higher high, so it's trying to reverse a trend. My bigger problem isn't the actual hit. It's that it didn't really hold up at all. It just kind of slunked right back down underneath on pretty high volume. So that's typically more of a distribution signal. It's not something I want to see. And then because of this yesterday, and I was saying this really didn't sit well with me, this drop down here, this looks like an SOW because it had already made a higher support. There really was no reason to come back down all the way through. It broke a support to go to a lower support just to try to find a bottom. So it seemed like there was a desire to come through here, which is right around that 305 level. So one of the charts I had posted yesterday was like, there could be a situation like this where it comes down here first, then goes up. And that's kind of what I had as like an option because I was like, it doesn't look really strong in that move. It's made a lower push now. So at this point, it's come down below. And this isn't, I wouldn't call this like an ice. It's more of like a middle for the wave. So if you're getting a little concerned because you're like, oh, it broke down, it's going down now. Well, kind of. I mean, yes and no. This is like the upper wave. This is pretty typical of a top, but you still have supports, right? I mean, it's not like at the end of the day, like just because it dumps here doesn't mean it's going to dump forever. It doesn't necessarily mean that. That's not necessarily the case. This is just locally, like what we're saying is locally, yeah, if it drops through here again, that's where that trend support is, and it already pushed through it. It's probably going to come low back down to 297, more than likely. So either it holds up, breaks out again, and just goes right there, right above, like it has to be above 311. I guess that's an easy one to pick out. It's been very difficult for us to get over 311. I'm inclined to think it did that to flush through that middle. So I'm going to continue to kind of reassert the idea that it probably is trying to get down pretty low. Maybe it's testing that 296 floor that's in view. Like we're testing high, now we're going to test low and see what we can get. See whether or not sellers jump on it on the breakdown here. I don't like to ignore wicks. I think that's not a good thing at all. So I'm not going to ignore that and pretend like this is some kind of like widening or narrowing that's going to, I mean, whatever. You can do it if you want to do it, but yeah, this is already tested high. Sorry. I should have pushed this over. So wait and see. If it has a UTAD, it's probably going to hold up one more time a bit higher, like halfway up here, and then try again. And there's a possibility that if it breaks, this is an M cross, right? 1, 2. So if 1, 2 can break out, then you got a pretty good chance you're going to run. This is where you want to see it happen. If this doesn't go, it's done. I think it's going to come back below. That's it for the time being. Not done forever, just back to 27 range. It seems very, very likely. So, yep, just a kind of a red day overall. Not really seeing a lot of buyers stepping in. This is a SPY I'm looking at right here on the right side. I don't think upside is over. I just think that it was going up on weakness, and when that happens and you get little pullbacks, those little pullbacks look kind of nasty. They're not really little. So you're going up on kind of weaker legs. It's not usually as strong. Yeah, this to me just looks like an LSPY. there's going to be bulls in the market that say this is like a spring, and that when it gets above here, it's going to find support. But I got to tell you right now, if SPY comes back below, it doesn't really matter if this continues up again one more time, which is what I think is going to happen. I still think we might get 583. And again, this could easily be us kind of doing a hold here and then pushing up into next week or something. But I got to tell you, man, if it drops then below this level, and it is on the screen, I think, correct. I think that's the right level. Y'all aren't going to like this if you're bullish. But it comes beneath this 565.40, especially if it makes like one more push up here, and then it drops back through that 5. I'm not starting to think, why would it even do that? It kind of reached the edge of the, like the S&P 500 to me looks like it reached the edge of that range. So why do I think it might go up again? Like, why bother? I don't know. I know there were reasons. I think the big one was that that's the middle of the S curve. It's like a 50% retracement. This might be it though, because it's not trying to decide what the heck would be gained by going back up. Maybe again, this idea of like a shouldering motion. Yeah, maybe. I'm having a little bit of an old man moment because I can't remember why. I cannot remember why I thought this was going to come up here. Like, there was other reasons. I think this was probably the biggest one right here, this one. But like, why would it break out of that trend? It tested the creeks here. It tested these jumps, backed up. But I mean, that's kind of the only reason. There's another set of parallels that you could argue like that kind of makes sense. These are a little different. Let me get rid of this one real quick. So these are more like shoulder motions, I suppose. And they would represent, yeah, like layers to retest on the way down. And it does seem like we're kind of getting them. You know, you can see the layups right there. They look pretty solid. So we're testing that trend right here, which was established in December. This is another one of those things we've talked about on this channel. Like, I think that the market already knew we were going to come down. So there was a bear trend established. That's the same parallel we see here on these kind of shoulder tops. So we'd be checking the top of this one if we came back right now to 565. Potentially. You don't have to. We haven't yet retested this. Not since we took off away from it. And that also coincides with an ice check. But yeah, anyways, I guess it's possible. I don't know. I was just confused because I'm looking at this other one and I'm like, I don't know why you'd come back. Like, it didn't make sense to me when I was staring at it a minute ago. I was like, I just couldn't understand why you would think it would go up higher than that channel since that wave is done here. It's the same distance. But rotations are a thing, so I don't know. You guys like, what? Well, there was a bigger rotation here, like a bigger S-curve. So it's possible. I don't know, man. Maybe this is like a weird... Because that almost looks right. Maybe this is just a kind of like a strange breakdown that happens, and then we come back up. That would be bizarre, wouldn't it? Maybe everybody expected to sort of see it react one way or the other going into April. And I haven't really made a lot of effort to do it on SPY, particularly. But it'd be interesting to see if in April this comes up and doesn't go way beyond. It breaks the casing here and then it drops through. It'd be super bizarre to see this kind of chop out again. But it might, because this is a really important level. The market may want to chop along 565 again, right here. So I'm wondering if this actually doesn't quite get there, that would be pretty fascinating. And then instead, instead, yeah, what? Instead of taking the obvious approach now, which is just up, we get this slump, and there's some kind of a delay or something. This is bizarre because this actually lends itself very well to a inversion here. That's actually a larger scale inversion. It'd have to create like a bigger channel up. It's like a channel up, breakdown, channel up. That's like a micro version of it. Like the same thing again, but more compressed. Which I think the market likes to do that when the market's uncertain. You get a lot of that same repetition. Trade up, drop, trade up. It may also explain why the market it got so overbought so quick in some cases, some time frames. The dynamics there just kind of follow, is what I'm trying to say. I hadn't really considered that possibility till just now. Yeah, that may be why we're setting up where we are. So there's an offset. Man, that would be crazy. I'm just thinking about it in my head, but that would be a pretty massive deal. It would be crappy to trade, though. I mean, it wouldn't be very fun. This is not really straightforward. So let's go to the 2 hour. I want to see something really fast. Two hours at 581. And let's go to the 30 minute. 30 minute, unfortunately, it looks like we just lost it right here. Not the best trend anyways. It's okay. All right. Well, based on the way this is set up, it does lend itself pretty well to this idea that I'm just trying to toss around right now on the chart. Because, that 15 minutes in the same spot as the 30 minute? Yeah, it is. Very interesting. Right. We had a gap right here that we gapped up and left the gap open, and there's we could talk about that all day if we want to talk about gaps and junk, but that region that we gapped up at is this really important price level that we're just talking about, which is like a very historic top and bottom of the last few years, and we'd want to use that as a testing zone. It certainly seems like that's the case when you look at all the gap zones right here on SPY. To come down and fill that initially looks kind of bad. It's like a 50-50 drop through the 30 and the 15 minute. But if it were to rebound, even by Monday, it doesn't have to be like now, it gives you an opportunity to test the floor here, come back and retest it. Technically, you can still make a higher low, but if you want to at this point, and I don't know what the market's going to do all the time by any means, but at this point, it would be like pretty much a given that if you wanted to test it low and see if we're going to break down again, you could do a liquidity test pretty simply right here. And I think it's a good spot to go to for that reason, to see if you want to try to stay above or below 565. Makes sense. We come back there. But in addition to that, it would be like a weakness on the trend. So if it drops that level and then it has like a spring going into Monday, then you come back all the way up to the top to distribute if it's got the weakness. So you think, we're going to get to 583 because that's just there. You're just going to get there. So maybe we're going to get to 583. But in reality, it may be that if there's a weakness here, it doesn't even come up that far. It just goes back up to like 577, which is still like a logical place to go, which also is a break of another creek level, but it's like a 50-50 around it. So it's not a particularly strong break. It's kind of just like a quick jump from whatever low this is to this high, as you can see. So you're just using momentum, using the inversion here on the liquidity to just drive the price back up. That's the sell-off motion. That mirrors what we see, and it's similar, I should say, to what we see back here in that drive up. Although in this particular case, we could argue about what the end result is. This one's a little different than this one, but it'd be a similar motion, essentially. That's what I'm trying to say. But slightly maybe longer winded. So some kind of a directional wave this way, back to the upside. I'm not going to redraw that. I'm just going to do this. Like a directional wave motion here, back up again. And then if there's a weakness, an SOW happened, I think at that point, you go the opposite way to drive back through that chart. And this is how you get back down to, so you go right back through the intersection of the ice and the creek. That's your pivot, like your big pivot. You could drop right back down through there by Thursday. And that makes sense because if there's uncertainty at all, and this ends up becoming bearish, it's probably going to pivot on the second, if it's not good news, or if people don't perceive it as good news. Just sell the news, whatever it may be. That's actually right in the middle of those intersections. So there is always the chance that we just kind of compress right here and we don't go anywhere until that date. So we just do this big sideways motion and then pop over here. But it'd be kind of flip a coin type deal if you want to talk about that. I don't particularly find that one to be, I don't know. You can see right here there's like a push and then a pullback after the bottom. You could see something like that happening here going into the second, I suppose, and just kind of pinning it down. But either way, I still think you could see a pop and then a drop, or a drop and then a pop. So still put that in the same spot. I'll just leave it there for now. It makes sense to me, so I'm not going to move it. I mean, you guys might be like, the timing's all off. You need to make it. No, I don't care. So then the rest of this is really just like a reaction move that breaks down. And I think it'd be pretty interesting to see if that rebounded above here pretty quick. And it may look really bullish to some, but I still think that could be like a second LSPY type motion. There's no guarantees you're ever going to get back here and retest this. It's just very likely going to happen. So that's why I'm like thinking that this is where it happens. But I wouldn't put it past them to like wait till the last possible minute. Some kind of news mid-April. It just kind of squeezes the market back up a bit. At that point, really at any point, if it makes that high and then comes back through, I think it's bad. Let me try one more thing here because we're kind of using some estimation that may not be the most reliable. I'm going to try one more thing. Yeah, that's pretty close. So when you look at the potential for a second move up, and then a potential for a later move, they're definitely in the right spot. 583. This may imply that it happens even later, but I don't want to get too deep into that right now. Like late April. It would depend on the SOW, because what this SOW would do is generate, if it generates a new bottom here, is that it now tilts a new creek out. So this is, we're assuming this is the middle, but really an SOW would like tilt it out. So if the SOW comes down farther here, it breaks below this initial trend. You're now generating like a new trend. And that ends up being like more of a pivotal marker as opposed to what I had originally done for the angle here, because that would change. We can't know until that happens because we don't know where it would go, but that could adjust this quite a bit. And I'm thinking that right now, the best estimation we can do for something like that is this low, because again, support and then rejection, support, rejection, and then this area right here as rejection. So I think right now that's probably going to be, that looks like it doesn't hit it till late April. That's right on the money though. Well, if this happens in late April, then it could be a market squeeze. This could end up playing out quite like an actual spring then, if that's the case. It's a curiosity. I mean, to me, that looks like an LSPY at the moment, which is a last point of supply, where you've dropped beneath the floor and you're just chopping up in a bear flag. And an LSPY usually ends pretty badly because you end up dropping and then going lower, which is what I originally was thinking anyways, was that the market would probably have like a massive capitulation here. There are always alternatives. It's never one-sided. That wouldn't make any sense. I guess in theory it could still be a breakdown later, but it doesn't really make a lot of sense to me. Because if this is an M up and it's pretty large and then you do it again, your drop would be only back to, like, there could be a drop, but it wouldn't go all the way back down. It would only come back down likely to this floor, almost like a double bottom. So like you'd have something like this going into May. And I'm not 1,000% sure about where this hits, but the expectation would be that this guy generated like a new flow. We're just trying to see where waves might form. I know that a lot of this is speculative. I get it. But that's sensible. I wonder if they go back for that, ultimately for that low. I don't know, they might. You could probably see it come back down into May. Sure. Generate like an actual touch on this creek instead of just like a kind of a pass through, like an actual support there. And it's like a double bottom spring. Boom, M, boom, and then go. And that lays pretty well into the idea that there's a May squeeze on the market on the whole. Yeah, so this is kind of sucky because I might backpedal a little. I'm going to keep it on the chart. I still think it's a possibility this goes right up to 583. But I'm going to backpedal a little bit because I do think that looking at the setup, if there's uncertainty, this is probably where you keep the market for the next month. I don't know why you would take it anywhere, especially if there's more like tariff delays. I'm just looking at SPY like it seems kind of straightforward. You're probably going to try to build out a support along this 565 and see what happens. And it is the less extreme version of like things that could happen. I mean, we've talked a lot about 4-hour and daily breaking down and massive dumps and all this other stuff, or massive rises, but the middle is often overlooked, in my opinion, and that is a middle scenario of building out long here, longer term. And it, oddly enough, it kind of just looks like an inversion on the top, which is pretty typical for a wave to do. It does not mean it goes up forever. And I actually think that this sort of lays into a better analysis anyways, because when you look at the big picture, this becomes like a middle. This currently is like just an ice level. We haven't done anything, but this would enable us to test it and then break it. And if that happens, you turn it into kind of like a pivot point. This is how you could easily get back to like what we would call all-time highs or whatever going into June. And we've kind of looked at this before and said to ourselves that we think this might be roughly what happens on some of these meme stocks. The market itself, though, kind of lends itself to that too. And I actually think that 2025 might be pretty decent. I'd be curious, though, if it continued into 2026. I have a feeling 2026 can be pretty bad. Like, once we get there, it's not going to be the most pleasant thing. So if this continued to the upside, we'd be like, okay, cool, it's going, But I wonder, part of me wonders if, like, then 2026, after January, February area, we're left with like an even bigger problem. because there's another widening, I guess, right here. 1, 2, 3, 4, 5. This would be a halfway point for the bigger move. SPY goes to 718. You know, obviously it's not going to happen overnight, but and then your drop is pretty significant. Comes all the way back down, probably right back to where it started on the rally. 2026 is kind of a downward year. I don't know. That's a lot of speculation. That's way in advance. But I do find it to be peculiar. This current setup, wondering about this 283 and like why you go there now. Now I'm starting to think maybe this just punches through it for the moment and then breaks it mid-April. And the expectation that the market goes lower is never really met. So they keep getting people bought in. Like people will just keep buying puts and all this other junk, short positions here because they're thinking it's going to drop. And at some point it just reverses going into May and never really makes the bigger drop. And so everybody's like, what the heck? You know, you get a market squeeze. And it looks really good until 2026 comes around. So you get like 6 months of bullishness. And then in 2026 is kind of the crappier year. Like overall. It probably starts and ends in much the same place, but it wouldn't look good. This didn't come back up, so it may just be done. We'll see. All right, so far Tesla kind of following Booksy's little lines. Doesn't look like it wants to necessarily jump here, so... But it went to the lower end. That's interesting. So it did go to the low end. So, I mean, it's just like a, is it going to go or not go kind of thing. I don't know. That's interesting, isn't it? You're like, why do you keep saying it's interesting? I'll decide if it's interesting, Booksy. You can't tell me whether it's... I just think it's cool to see, like, the S-curve in motion and the possibility versus like another alternative path of, I mean, this looks okay to me, but this is also like a 6-minute time frame, so it's whatever. Oh, I didn't see that. Yeah, let's not do anti-Semitic arguments or comments, okay? I'm not for that. I think that's probably pretty evil. Even if you mean it in like a joking way, I don't think it's funny. I'm not going to take it that way. Bon. I didn't see that. Did you make a comment about BON? Yeah, you did. Yeah. Just. Oh. Well, he said A. I mean, I don't care what race, ethnicity, or people group. We shouldn't use them as a kind of a slur. It's really wrong. Nowadays, it's becoming more and more common, and it's really sad to hear anti-Semitic stuff going on. I don't really get it. Yeah, it's all right. Well, it's been verbally warned if he's still there, but a juke. Yeah, that's what I thought. Maybe I've said that before. Um, yeah, I don't know what to make of this Tesla thing. I'm not gonna be able to call it out, guys. Because if it does cat ear, it still look like a breakout, like initially. It's really not going to be possible to know unless it comes above, well, move the line. But it really wouldn't be possible to know unless it comes back above 275 with some support. So it had to make a higher high here. This right now just looks like a potential inversion back up to 274. Yeah, I don't know. That's why I didn't I didn't even see it first of all, and when I saw it, I was like, I have no idea. Yeah, I hear you. I just saw it as a good trade, and I was made like 400% or something on this push. So I'm not getting into politics on Tesla. The volatility on it is obviously in part because of recent earnings and recent problems with some of their vehicles, and then the politics. So the volatility has been all over the place. I don't think I'm going to keep trading it forever, but I wanted to see if we're going to make that final push up towards 300. At this point, don't really care that much this week. If I do see a good trade opportunity, I'm going to take it. I was just following it because I had traded it up. So for now, I'm going to keep following it. Ultimately, are there better trades out there at any given point? Yeah, of course. We saw Tesla as a good trade. I saw it as a good trade because of certain things that set up that looked really good. And it was good. It was a huge trade. So I'm not going to worry about the politics of it. It is what it is. I don't attach myself to the brand, in most cases. So, yeah, AMD was one that I traded up from here as well. I mean, I kind of just saw the whole market popping, but some of the stocks looked better than others. AMD had been a mixed bag for me. You guys already know this. I think this is a very bullish stock. I don't personally understand why it didn't do well aside from just tech being tech. Tech got kind of overdone lately, and people see it as like a tech bubble, and so they're like going to try to stay away from it because they're worried it's going to be like the .com thing. I mean, it's already had some pretty big corrections, but AMD never took place in the big run-up. It just didn't. So it kind of reminds me of FANG in that way. It's like it's been in this like long-term retracement period anyways. It really wasn't chasing anything. I mean, it's not like NVIDIA where you're trying to like chase a trade. AMD just didn't even have the big AI boom, and there's a lot of reasons for that. If you follow tech, you know it's because they didn't give good estimations on their outlook for their data center and things like that, and kind of caused them to stumble. Their recent brand new graphics card is like 10x the sales that any of the other previous releases have had. People are gobbling them up because it's cheaper than buying NVIDIA graphics cards, which have become really, really expensive. For the average consumer, they just want something that can run, their favorite game or whatever. AMD tends to make the cheaper processing cards. They are heavily invested in AI. The problem is that they did not communicate this well. They didn't give good guidance to it. And people just really did not respond well at earnings. It was taken down. But from a valuation standpoint, it's pretty low. I mean, it hasn't been this low for a long time. And I don't think this is a company that's going away. And I think about those kinds of things, and I think about sometimes I've said that, and it's like, well, it doesn't really work out, does it, Booksy, all the time? No, but the Warren Buffett approach to stock investing is not a bad approach. I mean, finding companies that you think are good companies that are going to be consistent and make money, and over time are going to grow, that's a good investment. You don't have to, not everything has to be a perfect swing trade or whatever. So yes, AMD didn't work out on that first swing that I made. It just didn't, into earnings. I know that, believe me. But at the same time, I was like, it's still ridiculously oversold. I mean, it came down to some historically oversold levels that it hasn't seen in like a really long time, like 4 years, kind of 3 to 4 years. And so there's just a lot here that you could unpack. So I did buy in at the bottom again, and I recently sold at the top here because when I looked at it, I knew this would maybe be a little bit of a tough spot to break. I do believe, like some of the other stocks that we're watching, that AMD might go up a little higher. It could be pushing up to the 120s. I certainly think it could get there. I had it on the chart. You can see up to about here, and then I had it potentially having an extension beyond. But as you can tell, we did not make that extension because we didn't pull back. When we do stuff like this, I always kind of think in the back of my head, like, all right, well, it didn't go back down and check. And I've said it a number of times, like if it doesn't go back and back test, which didn't happen right here, then you're kind of left like, uh-oh, is it going to distribute? Because if they keep it up higher and keep pumping it on weakness, that's usually a sign of distribution. Unfortunately, that's what happened. So when I hit 113, I got out, and I was like, it's not coming back down. This would have been retesting support, pushing back out. So instead, we're pushing up high, and now we're selling back through. I don't think it's the end of days kind of thing, but the end result, if something like that, would probably be back down to retest moving averages, probably the 107 gap. This creek, obviously, that it's sitting on right now could hold, but it's a gamble. I don't know, if it's going to hold. So I'm not doing anything with this at the moment. I'm not trading it. I'm just kind of watching it. I think that AMD would be a good long-term opportunity if you want to invest in something. It's your choice. But I do feel it's a good stock, and it has potential to go back and actually hit all-time highs again pretty easily. Just based on where it is, though. It's not quite there yet. There could be more shakeout in the near future. And based on where we set up kind of a bottom, it wouldn't surprise me to see some serious shakeout. And I had thoughts about this coming back down to even 96 again. So I was just playing the swing. Ultimately, this is broken out of a localized trend, which is great. Long-term downtrend that started all the way up at 174 back in October, and it's been a consistently long downtrend. It's an S-curve. The 50% for that S-curve is around 130, and that's where most of the valuations are kind of established at this moment. So it's going to be a little bit of a carrot on a string, perhaps, for bulls. Just keep that in mind. I wouldn't be surprised if during this kind of period of trepidation, it's a lot of shakeout in here, in this April, May region, in this particular zone around 110. And then I think it's pretty much a buy from there for me. So I'm looking at it potentially heading back up. Yeah. Yep. There is your GME move down low. Because it flushed high and failed to hold, there's no question it's going to come down. And it did. Which probably means that AMC is starting to slump. And it looks like it is. I think it's trying to slump back through. Bears are trying to knock it back down through the trend support, which it seems like they got that already. The green line going up here, it's gone. And then that's like your ice, and that makes sense. I'm not thinking this is likely right now. I don't know. I guess it could be there. Shouldn't have deleted it. I'll leave it on the chart, whatever. I'm thinking it's less likely, but we'll see. But yeah, it's starting to look like they're maybe going to try to manufacture some place to hold it into Friday at this rate. Not particularly upset by this GME price action at all. And if you're going to trade from here, there's nothing wrong with just a classic drop a trend and see what happens, once it breaks. But I don't know why you wouldn't, at this point, try to come back down and retest this region around 28. So that's kind of what I was eyeballing earlier. But this, I don't know. This is just a mess on AMC. I don't like it. I'm glad I got out of those calls because it just did not look right this morning. It looked like a mess. To me, if I'm really uncertain about something, I just probably just stay away from it for now. And I think that's true for everybody. If you don't like it, just stay away from it. You don't have to do anything. That's so ugly. All right. I'm starting to see a kind of common pattern involve here, which is a potential rally maybe going into next week, and then that would be kind of the end. And we're not really sure if it's going to go very far. So you really probably wouldn't benefit much from it unless you guys are like, what do you mean? I thought you said AMC's going way up. I don't know yet, right? We'll see. I still think it will, but based on the way this is set up, we got to just find a bottom here somewhere. We just haven't yet. So then I think we're likely going to get kind of a pump out that's pretty quick. Yeah, I don't know. I'm not sure what to expect. This looks all kind of bleh. I don't like how low this is, but I gotta say, man, I don't want this to happen, y'all. I don't, but I gotta just say it as it needs to be said. This is in a position of potential, like, serious problem zone right now for AMC, because if it cannot manage to break upward here in the next few days and we get some kind of like negative news catalyst, we're in big trouble. Like, I don't know what to think about that. Yeah, this looks like the same creek. It's the same thing. I don't want it to drop back through there. Cat ears are funky. Like, they're really weird. They don't, man, they just don't always make sense. We've had times where it looks really obvious, like it should be heading up. Like right now, it seems pretty obvious to me it should be heading up to like 370 or thereabouts. But just every now and then, like I say the same thing before, you think it looks obvious it's going to go back to a level. GME will do it, but then AMC just won't. And I don't like the idea that this cat ear, it could already be manifesting in weakness. I'm going to be pretty upset if it just dumps. Not that I have a huge invested interest right this second other than my shares, but more so at the technical side of it because I wonder if they're going to go make another SOW first. I think it'd just be really frustrating from a technical standpoint to see it do that. I don't even know what that would mean. Like I'm having like a hard time wrapping my brain around that idea. I don't know why. I'm reading your comments, Titleist guy. Yeah. Yeah, I know. Spy had a lot going for 500, for sure. Like I've got some stuff down here as well. There's definitely areas down there you could go to, but I think that there's a challenge here about the way the market reacted to the news that it reacted to. In that a lot of the downside in the initial pump here, I think a lot of it's priced in. I think there's a greater picture, a greater narrative here of confirmation if this ends up being an LSPY and then dumps and hooks below 565. I think you're pretty much at that point in a free fall mode. If you get that reversal here, then yes, it's just a very classic case of mid-level S-curve kind of stuff down pretty low. And I think 494 and I have like 513 marked off. But sometimes, man, the market turns before everybody's expecting it. They think it's kind of a mixed bag, you know. And reading too much news about it can make your head spin because somebody will say it's all very reactionary, right? The news. Markets are down because of people worried about tariffs. It's like, well, that's the same question every single day. You can't just put the same headline every day that markets are down. And that's what we're seeing is like, people are like, here's the reason why markets are down. You want to know why? Because people are worried about this or that. They just pick out one piece of bad news and attribute it to the downside. I'm like, I don't know, man. I think a lot of the news and the worry here is pretty self-evident. And there's really good traders out there who think that the market's going to rebound and hit all-time highs this year. There's other people who think it's not even close to being done. And I don't find that any of them are any less credible, which tells me that it's really just a market of uncertainty anyways. And sometimes the one option we don't think about is that sideways option and just not doing anything particularly interesting, where bulls are trying to think it's going to rally and bears think it's going to dump more, and we just sit there. And I find that to be sometimes probable. Like, I mean, yeah, it could happen, but we were waiting for that stuff to happen back in 2000 with the COVID stuff too. And I just can't help but shake that. I can never shake that time at this point because it so recently was like this big deal. And I know I've talked about it before. I'm not really not meaning to brag or anything about it, but that bottom in October, it just bugs me so much, this bottom, because I remember thinking like from an iterative standpoint, like at that point, I was talking about the diamond structures and how they really should be working outward. And I won't forget that conversation I had between myself and like two other people, and they were big name people, on the X platform. And, it's the guy that does the wheel stuff, and this other dude that I used to be in a Discord with, and they were both just like trying to be really, I don't know why, but they were being like really dismissive of. It bothers me because I called the market bottom at that time, and that was like a really big deal, to do something like that. And I was still pretty new. I'd only been doing more publicly trading for about 11 months or something. And so I was like, no, I'm pretty sure this is probably it, because I quote, everybody was expecting like this big sell-off because Michael Bublé and his posse were all like, the market's going to tank and go down forever. And the big short guy, and because it's not Michael Bublé. And the one thing I remember about it was that they were trying to make an argument. The guy that I was talking to said, what the news is doing, and this is kind of funny because he's like thinking one step ahead, and I'm like, okay, yeah, but. So he was saying like, well, the news is not going to acknowledge, this is what he said. He said, the news is not going to acknowledge that we're prepared for downside. They're going to think that we're all not prepared, but really everybody's ready for this big sell down that's going to happen. We're all prepared for downside. And he was like, and the news is going to just say that we're dumb money and all this stuff. Like we're not smart and we're not prepared. I 100% agreed with the sentiment that the news does tend to play off retail like as dumb, like that we're not prepared, that retail he's like, the news won't admit that we were all prepared. But then at my back of my head, I'm like, yeah, but I don't think that we're all prepared for the right event. And you're like, well, you're rich now, right, Booksy? Because you called the bottom. No, because all my liquid was tied up in AMC. So I didn't trade the greater indexes at that time because I was looking at them as a guidepost, trying to do comparisons to like AMC. Because at that point I was just like 100% like AMC all the time. And most of my liquid was tied up in that stock. So like I didn't have a lot of stuff on the side. I traded a couple things, for the big guys, and then that was it. But at that time, I remember thinking like, you're kind of right about the news getting it wrong, but like, I think you're behind, because in my mind, I'm like, the market looks like it should be bottoming and the iteration should be going out, and everybody's bragging about, or everybody's talking about this massive downside that's supposed to come that just never showed up. It just didn't show up. And he was posting about puts, and I'm like, that's a historic number of puts. Like I had never seen that before, and I looked it up, and it was apparently some historic number of downside puts in this area. And what I said was that I didn't think that the market makers and the option sellers and all those people were going to let that happen. I was like, it kind of reads the opposite way. Like you're saying that they're going to be like deriding us for not being prepared. And I'm like, kind of reads like ironically that we're not going to be prepared as retail because the market's about to rebound and everybody's thinking it's going to go the other way. And that was universally what everyone was thinking at this point. And it wasn't like a few people here or there were like, oh, it's probably going to, some people probably thought it was going to go up. I did. I definitely wasn't alone. That's not what I'm saying. But like, big names, that people were like following were like thinking the market was going to have this final massive turn down. I'm like, I think it's already happened. What was curious about that was then this other guy comes back and he's like trying to dismiss my comments because he gaslit all the time. He tried to make me feel bad using my words against me and stuff. And I didn't realize what he was doing till later. When I really understood what gaslighting was, I was like, oh, okay. And the way he spoke to me, it was very manipulative, and I don't like that. So I got away from that. But he said something like, well, yeah, but moneymakers are always gonna play both sides. They're gonna make sure everybody loses all the time. So he was trying to like basically make a general statement that dismissed my statement, to say like that this particular instance was no different. And I was like, no, but it doesn't change. I don't know, man. It's really odd to me. That's an odd thing to say. I didn't like that. So that experience has largely like shaped a lot of now what I think about when I think about public discord. Now you guys we're pretty close. We can talk about stuff and hash through it. That's different. But like when people talk about like these big names saying this or that, I look at the news and I'm like, yeah, I mean, it's there, but it's very messy. So like here, you're like hearing all this stuff about how like the downside is just getting started and it's horrible and it's going to be this massive sell down and blah, blah, blah. It's horrible. SPY posts another week of losses. There's no end in sight. People are going to whatever. And we're like looking at the charts like, oh, there's a divergence here. It's probably going to pop. Then it pops and everybody's like, oh, the news is posting about people are easing up. They're no longer worried about things. That was before FOMC, by the way. And then FOMC comes, oh, the news is not that bad. People like this little dot chart. There's, it's like basically just flat. I don't know. That's what the cuts look like. It's like flat GDP growth or whatever. And it's like, yeah, all right, cool, man. But it sounds like you guys are just kind of reactively reporting on whatever you think people are doing. And what back here they were saying is like, well, retail hasn't finally sold off yet. So we wait for retail to finally sell off before the market bottoms in because they're idiots, basically, is what these articles were saying. These were Yahoo Finance kind of articles and stuff. And we don't know the market bottoms in until retail sells. Then we know the bottom's in because retail's dumb. They'll sell at the lows. And that's the idea. It's like the final liquidity sell-off. They're not wrong. Like that does happen often, is that there's a massive selling climax. And that's usually where a lot of retail gets screwed and stop losses and all that junk. But what's weird about that is that then I went and read another article like the next day, and they're like, retail is buying the dip. They're not selling. They don't know what they're doing. They don't understand. And I'm like, so which is it? Are we supposed to buy when it's low? Or are we supposed to sell when it's low? Because apparently the expectation is that retail are idiots. We don't know the market's at a bottom until retail finally sells off, which does happen, or retail loads up on puts, which does happen right as the market's bottoming, right? Because it looks the worst. Or is it what's the answer, right? So institutions aren't buying, so maybe they don't think the market's done yet. They've been selling. But then we're going to like just deride retail for buying on a bottom, like if we think it's a bottom. It's super strange to me. There's almost like an expectation that precedes itself that ultimately plays into these narratives about what people think is really going on. And I'm like, it doesn't matter. Whenever the day is red, always the news is going to say people slid on reports that tariffs were maybe not going to be delayed. And then the next day is the market jumped on the reports that maybe the tariffs will be delayed. And I'm like, I'm pretty sure that's not any of it to some degree. Because big picture wise, this is a 10% correction. So if we're going to go into a bear market, okay, we're going to do it by dropping back below 555 in the future. We already knew that there were some, I think it was JP Morgan or somebody else had like a huge put position, and they never allow it to go below that level. And it's not a straddle, it's not a cradle. I forget what they call it, but they had this massive options, multi-billion-dollar options position for puts at 555. And the last time they had something like that was during COVID and never went below that level more than once. So it was strange. So in March, which is now, you're going to see whether those are shaken out and what changes, because it could be that the floor is dropped further, right? And that's totally possible. But it's weird to like look at the technicals and be like, all right, this is a widening. It's breaking down here. You're probably going to come back to where the widening starts. You've got massive option positions. You've got reasons that there could be floors there. And yet we're still on that floor on a bullish divergence, and people are still talking about, like, people are talking about retail like they're dumb and that the market still has more to go. But now that we bounced, guess what all the articles are saying? You can guess and you'll get it right. Well, people are saying that the market might actually be okay. It might actually have found its bottom. Really? It's like, really? So I don't know, man. I'm all for the idea that this could definitely not be a market bottom, but I'm actually more inclined in some ways to wonder if both sides are going to get screwed in the next 2 months. It's just a curiosity. I wouldn't put much else into it other than just the news and the media, and the overall sentiment does not seem to be very in sync. Feels like it's a day late. And a little bit out there. Almost in a way to like mislead people into, as you tell people you think the bottom may be in, they're going to go buy. But then simultaneously with your left hand, you're saying that, and then with your right hand, you're saying we might be dumping another 100 points or whatever. It's like, okay. And that retail hasn't sold enough yet. And you're like, what? What is it? Is the bottom in, or we need to have a big sell-off? Or it's like, come on, man. It's purposely designed to like confuse people, I suppose. Yeah, I know. I got it on the screen. Came back down to 28. Hit that little yellow line. That's the line to look for. It was Colin, I think, was the one who came at me about it, but I don't know. I had a falling out with everybody, so it doesn't really matter. About the only person that I ever kind of like, I mean, Trey was fine. I mean, he and I got along, I guess, but I just barely met him before he like decided not to do AMC, and then Astro for a while, same deal. It doesn't really matter. I decided at one point that it was more important for me to just kind of focus on technicals and just forget everything else. And that's that. I mean, I don't know how he could have lost everything unless he sold. I mean, I don't really know what his story is, so I guess I can't say anything. But whatever. Behind the scenes, Trey was a really, really nice guy. I'll just say that. a lot of these guys were really nice guys behind the scenes. But then they would turn around and like lambast you on social media. So I don't know. But of all the people I met, Astro and Trey were definitely the two that, in my mind, were the most consistent, like straightforward people. Like they were the same behind closed doors and in front of the screen. So I don't know anything else about them personally. I don't have any other strong really opinions about their trading methods or like what they were doing on YouTube or whatever. I don't really have any opinions about those things. I didn't meet every single person that existed on YouTube and stuff. I met a lot of people. But the ones that were the most consistent for me were, I feel like to some degree, like that's all I really value in people anyways. And you guys like, what? I don't like when people, if if you're honest with me and just tell me like, this is what I am about and hey, that's cool. And then, but just act the same way, Don't tell me you're about something and then turn around and act completely opposite towards me, in that regard. That's it. But I don't have any beef against those two guys. I don't have any beef against anybody. It's all gone anyways. So it's in the wind, so to speak. This particular time, the other guy that was talking wasn't like a YouTuber, but he was somebody that I had respected. And honestly, I just made a comment about it because I thought that it was a little silly. But I don't know, man. There was a lot of gotcha mentality back then. So there would be, and on my part too, by the way, but it would be kind of irritating. I was also not a great place sometimes. So what I brought to the table wasn't always the best. So I'm going to put myself on that chopping block because I remember getting like upset which is super egotistical, but I remember getting upset when somebody would post something and it's just pure ego and like almost like narcissism, almost narcissism. I don't want to say I'm a narcissist. That sounds really bad, but like someone would post something like a week or so after I did, and it would look really similar to what I posted, and I would get kind of like low key jealous about the fact that they got like 50,000 likes or something, and I got like 20 with a bunch of trolls telling me I'm an idiot, And you're like, this is a really weird, unbalanced place. Because I just said the exact same thing and I got like blasted. And I said it like a week ago. And what that derives from is just a place of insecurity, like on my part. It's that simple. I was insecure about what I was doing in this particular realm, what I wanted to do. I thought if I had all these people following that I had some greater responsibility to some degree. I think that's true. You have an ethical responsibility to present things as clearly and as accurately as you can. But I thought there was some kind of responsibility I had to these other people in some regards to kind of like keep up or like, and that's just dumb. That's just dumb. That's totally wrong. I didn't really involve myself in a lot of mudslinging or anything like that. That was never me. I don't like that kind of stuff. And I really don't like gossip very much either. So I always try to stay away from it. Because everybody makes mistakes. It's not my job to like judge people for mistakes or whatever. But it was more about your own insecurity. Like if you're mad or you get upset or jealous because somebody else is getting recognition for something that you feel like you got to first, I get like where that comes from on a human level, but in the end, it didn't matter. Like, it made no difference. So it really just hurts me to be that way, and that's how I was at that time. So, um, and then I remember like that kind of spilled over when, yeah, like some bigger people started calling me out on different things and blah 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 blah, so on and so forth. I left discords and made new discords and blah blah blah. I mean, you know this story. But let me tell you, man, 2 years is a long time. 3 years is a long time. It's a lot of time to figure out what you want to be about in a particular space. So at this point, I'm not really confused anymore about what I want to be about. So there's a lot more to that story I probably go into, but this is not therapy hour, so I'll spare you. It's about stock markets. What are you insecure about? I'm insecure about a lot of things. But I don't see insecurity as like, I see it as like a choice. And then there's also like a reactive, impulsive insecurity. There's two different kinds. So I don't choose to be insecure about a lot of things anymore. Like when I go out, I don't want to look like I just came out of the gutter, but I'm not really insecure about the way I look. I just kind of like, okay, wear what I want to wear that makes me feel comfortable. That's a choice. But like naturally, like am I insecure about certain things, Sure. Like impulsively. I'm just not that kind of person that's built on confidence. Like I think there are some people in the world who I don't know whether it's nature or nurture, and I don't really care. But there's some people in the world who seem to be very confident and like secure in themselves all the time. Whether they got there through difficult means and like learning lessons versus just always being that way, I don't know. But that's not my story. Like that's not that's not where I grew up in that environment. I always grew up in an environment where I felt insecure for a lot of reasons. And so there's tons of stuff that just for me are not natural. Like I don't just immediately default to I'm confident about this. So I'll make choices. And I think that's why people think that I'm confident to some degree. Some people think I'm confident. Like my wife will say that to me. She compliments me on that. She'll say, "Man, when you want to do something, you just do it. You don't just sit there and feel insecure about it." And I'm like, "That's not true." But thank you. It's really a choice, I think, for me. I'm like, okay, well, I don't know if I can do this, but I'm going to try. And I'm willing to do that. And that expands to like every part of life. It's not just like trying new things. That sounds like a fun thing, right? Sometimes it's like getting through difficult stuff or like trying to change an attitude or behavior. I think people need to be confident that they can change, and that's important. But you have to start with like that choice. So yeah, I'm not like, do I walk around every day being like I'm the best dad ever? No. Like I'm still like anybody else. My son knows that I have faults, but as he gets older, you're gonna realize, and I know because I did, but more than that, like you're gonna realize the faults of your parents. You're gonna realize how human they are. I'm not particularly insecure about it, but it's something on my mind. Like my son probably thinks I'm better than I really am, and one day he's not going to think as highly of me, and it's going to kind of suck maybe. So I'm hopeful that he's gracious, so on and so forth. But yeah, man, that's so like, yeah, I'm secure that in the fact that these are people that love me. I love them. They're not gonna abandon me because I make a mistake or something. I'm very secure in that, but I'm also, just a human being. GME looks like it's gonna be okay. I don't know. To me, it's like getting to that point where it's kind of do or die. I think if it doesn't hold up here, it's gonna dump pretty bad. And if it does, we're probably gonna see some chop over the next day or so. And most of the market looks kind of the same to me right now. So this is probably a good time to kind of wrap it up anyways. I got to be honest, I'm pretty nervous that AMC is not going to do what I want it to do. Here's an insecurity. Not because it's not doing what I want it to do, because in the past, if we don't get this kind of break here, it just doesn't usually end well. So we need to see it really regain that strong support above 3. It needs to hold up and then push out with some strength above 315. And once that happens, we should be off to a good 50-cent run at least. I'm a little nervous based on the way this is setting up that it's slumping. And we're going to get some kind of like deathly, like measly, out of breath up thrust motions through here and then just fall. And I just cannot tell you how upset that might make me, because at this particular point, you should be going for, again, that liquidity pump. I don't know what the heck would be the point of just slumping down. So I'd have to kind of reassess. It wouldn't be the end of things. I'd figure it out, I'm sure. But I'd have to do some work, is what I'm trying to say. I'm just a little nervous right now about that, because what happened here, it just seemed to happen again. And we had talked about the iterations building out, but this also didn't come high enough, in my opinion. It stayed really low and it slumped really low, but it came back up to like kind of near the middle of the cat ears on this downward M cross. And this technically did the same thing just now. Came back up here, but it didn't hold. And that's the same thing that happened here. You see where I'm going with this? So like when this didn't hold up, it just slumped all the way back down and came to a new low. And I'm nervous that if this doesn't hold up here, it's going to slump back down and come down and go ahead and make a new low again. It wouldn't kill everything. It doesn't mean it couldn't go up. But again, it's like I have to reset the chart again to see what the next step would be. And that would be really frustrating. So really want to see AMC hold up above 296. I'm already not really enjoying the fact that we're kind of lost this trend. I don't think that's a good thing. It's not the end all be all, but it's definitely not a great feeling or a good sign. GME, on the other hand, kind of went where I thought it would go. And I'm not particularly concerned. I'm just kind of watching it. And I would expect there to be some kind of a sell down period, and if it can hold support, it'll hold support. It'll keep going. You got to watch volume, but that 28 level, pretty critical. The this looks like it wanted to go up, but I was really just using those as trends. Otherwise, we're really talking about sideways here. I'm not particularly expecting any kind of massive sell down. If that does happen, it could come as low. Man, it'd be hard to. It could come as low as 25.50 without being super bearish. I think if it came below that, it'd be kind of bad. Really, the creek out here could be quite far, but I'm also of the opinion that if we did that, we might as well just be going down. So, in the meantime, really just looking at this zone right here of contention. there's something about this that it's not sitting right. So I might have to, the AMC one, I'm going to have to probably look at it. I think I already knew when it did it this morning. I was like, that's not what it's supposed to do right here. It's not what you want. This is not, I don't know. I'll come back tomorrow with a better answer because I think I can't give you an answer right now. I'm thinking that it's simple as it just needs to hold above 296. I think that's all I really want to say. And right where it's at right now, it could go either way, but it's looking kind of bearish because it dipped below that trend. I don't really want to see it do the same thing that we saw here. If it does come down and slide low, but it doesn't make a new low, then I think it's bullish and it's going to flip pretty quick. And that's probably the best analysis anyways, is just see if it makes either the same bottom or higher low here. It should be good. Then I think we're in good shape. All right, guys, I got to go. I got some stuff I got to get done today. Appreciate y'all. The 32 level, real quick, I don't necessarily think 32 is going to get there. I do think it's a potential target. Don't get me wrong. Again, we're really looking at whether or not this is like a wave cross. So we really need to see it hold up here. The way it approached this means that we need to see kind of a reaccumulation of some kind before we push up again. That could be really fast, but I don't expect it to be part of the same squeeze motion. If that's kind of the question, do I think it's just going to pop and go up again? I don't know. I really feel like at this point you need to prove that this move is sustainable. Because if everybody starts selling off, it's not sustainable, right? That's not a good move. So remember, this big picture wise is the main creek we're trying to approach. Previously, when we did this, we hit it, backed up, and then did it again. And that's reasonable. I mean, we could see it do something like that. Just kind of come back and then go up again going into next week. I'm still kind of sitting on the mindset that we're really waiting on that April news. And with only a few more days to go and some stuff coming out on Friday for inflation, there's a lot of catalyst events coming up. So, I don't know. 28 earnings was my big thing. Everything else is kind of extra. All right, I got to go. You guys have a good one. Talk to you later.